Hello everyone, welcome back to another Lumley trading live stream. Everything should be up, but let me just check before we run into anything. Looks like everything is up, sweet. So I guess then we'll get straight into it. So we do have the market opening up in about a minute from now. Then we'll run through, I guess, the biggest gappers and see if there's, on both the large caps and the small caps, see if there's anything then that we really want to run through. We have also added, if you're not in the Discord, we have also added in basically Bloomberg Live, so you can listen along, and we'll be having that play throughout the stream as well. So if we're not talking the whole time, it's not a silent stream. We're going to have some audio, so it should be good as well. Yeah, if you're not in the Discord, again, we've added now these tabs. So we used to have the music tab, but now we do have Bloomberg Live, which again, if you want to chat while we're live, you can always jump in here. We'll be in here. Again, we have also added some new tabs to the Discord, so if you're not in there, why not check it out? But anyway, market's opening in about 5 seconds from now, and then we'll be good to run. Okay, markets are open. Let me quickly check what the SPY is doing on the open. I'm actually in on-demand mode because I was testing some things, so let me quickly update that. There we go. Sorry about that, and we are good to run. Again, if you're wondering why all the data back here looks kind of strange, that's because Monday was a half day, obviously, getting ready for the Independence Day holiday. And then you do have the after hours trading, but because it was traded during normal market hours, it's still showing on the non-extended chart. Just if you're wondering why it looks weird, you're probably seeing it on your own chart as well. So that all looks good. Then I think that is everything. Now let's quickly, I guess, see what stocks are moving. So Rivian up again today, up near $21, and I will unmute the stream so you can hear that as well. So hopefully that's all clear and everything. If not, let me know. But you should be able to hear everything. And we can start going through what are these key levels. So Rivian, deviation charts, and as well this weekend, or for this long weekend, we did get a lot of testing in. So I'll quickly show you. This is the XL chart we've gone through so far. These are the tickers we tested on these standard deviations. We can go through some of these on stream, but we're really trying to get a good idea from how they move from a swing perspective. How's the best way we can trade it? Will it be through vertical spreads? Will it be from outright shares? Will it be through just outright the options? So that's really what that testing time was for. Right now, it looks like it will be best to trade the outright options, but again, we will see. So Rivian coming into a key level at $23.30. So that's still our closest level. So on Rivian, still paying attention to that as its upside target. So again, looking for really a move for that. If we do pull back, looking for potential support on 1869, so that level's moved very slightly. Now we have had the Netflix alert go off. Okay, it's re-pushing kind of previous deviation, so nothing too crazy. I just had the alert on there, but it has just hit another 52-week high right now, up at $449.46. So see if we can break that $450 today. This will be kind of key. So let's see how we do.
How sticky is inflation?
One sec. Just want to do this, and then we can run through some more stocks. I think we just had AMD alert go off as well, so we'll check that out. I think that will also be at or relatively near its 52-week high as well.
5.1% decline in the headline inflation rate from 9.1% in June of last year.
Okay. Also, we've got a temporary fix on the live news as well, just as a heads up on the Discord. Not as clean as it was before, but it's just something temporary until they fix the old Twitter API issues. So to carry on, the Netflix key level as of right now, see if we break this 52-week high, we have $464.18. This is our first deviation on the 1 year. This will be key if we can push to that upside. So again, that's what I'm paying attention to. Again, on the open as well, we're seeing the SPY and the NASDAQ starts to push up. We're seeing the NASDAQ start to get a bit of a pushback on their 2-day anchored VWAP. But again, we should still be bullish until we push that anchored VWAP on the SPY as well. We also had the AMD alert go off, so let's have a quick look on that. Actually, I need to reset the Netflix alert. I want to be notified actually if we break $450, because that would be quite a key move. And then I also want to be notified at 462. So again, AMD's alert went off today as well, so we can see what that's doing. Looks like it's coming to retest its first deviation today, so we'll be seeing how this reacts. It's at 117.37. Again, that's our first deviation on the 1 year. So we have that there. So yeah, in the open, we're starting to push into it. Again, one thing we're testing from the intraday perspective, looking at potentially a 50-cent stop on these moves, and then probably at least a 1 to 2 risk to reward, which it looks like it's about halfway there now. But if we can really push that down to the anchored VWAP, that would be the ideal move, which it looks like potentially could be doing already. So AMD is quite a nice move off there. Again, if you're more long bias on the AMD, then I would be waiting for the break above this level, come back to test it as a support, then we could potentially look long bias. Or if we want to try and catch the low, 1560 should hold as quite a strong support, but again, we'll see how this plays out, but should be a quite nice support. Just had the Netflix alert go off again. We'll put AMD down here so we can keep an eye on it, but Netflix is key because it's now breaking 450. I don't know why it's not paying it on that left chart. Let me re-update that. Can't tell what's happening. It might be Wi-Fi issues. I'm not too sure. I'm assuming it's not down to Thinkorswim. It's loaded on my other charts. This one's just coming through now. There we go. Breaking the 40-50. Could be quite nice. Again, the upside target, if we can continue to push up on Netflix, is at 464.
So, David, let's and focus on labor numbers. Shows a little bit of slowing versus the prior month, but still.
Tesla holding that anchored VWAP as well, quite nicely. QQQs, so that again, this is the Nasdaq ETF, just so you know, holding that level nice. Thinkorswim alert on FIS. So again, that's Fidelity. We'll put Netflix down here so we can keep an eye on it.
And what's interesting is that it's come at the expense of productivity. So this isn't a case where we're adding.
Okay, yeah. So FIS again. This is Fidelity National Information Company. It is continuing to push up. We do have our 6-month level at 59.81. And if we are able to break that, which does seem possible, we tested this relatively high. Oh, I've got audio on that. Let me turn that off. Okay, Netflix is moving actually on a catalyst as well. I didn't see that before. It's at 1.6. Goldman Sachs did upgrade it from to neutral from sell. So looking quite good. On that again, Fidelity, we do have the 59.81 level, and if we break that, we have the 62.33 I'm paying attention to. Again, just let me know how you like having the Bloomberg audio in the background as well. If you find it a bit annoying having the two voices speaking at the same time, let me know, and I'll just try and pause it when I'm speaking and unpause it when I'm not.
But hire them to basically be idle. So what's been happening is that people have been getting hired, and the markets will.
Oh, don't love it. Cool. I'll try and turn it down. I'll just turn it on automatically, I guess, when I'm not speaking as much. I'll do that. That should hopefully be alright. I wish there was a way to automate it, but I don't think there is. There we go. Any trades you're looking at so far, Bradley, or any levels? I think I had another like go off at NNDM. I don't think that was so much, or it's not a large cap, so most people probably aren't looking at that. Oh, we had EMVX and no, TMUS didn't go off. So we have EMVX also went off. I think these will be old levels because we traded this. This was our loser from I think last week or the week before. having a big issues on loading right now for some reason. This is really weird. Costco at $542.80. Once my charts load, I'll try and check it out. Everything's really just going weird on my Wi-Fi. I don't know what's happening recently. It's been so bad. I'm going to try reconnect and just see if that works, and then okay, there we go. Everything should hopefully be launching. Let me just make sure it says we're still live. Yes, it does. Just reconnecting my internet seems to be fixing the issue. So EMVX alert did go off. Let me quickly check out those levels. So we're coming into actually the second deviation on the 1 year. I think this is the first time we're testing it. I have cleared everything on the chart. It's not deleted yet though. There we go. 19 of 58. So this could be quite a nice trade. Again, I did take a loser on this, I think last week. So I'm going to be a bit more patient on this stock. Ideally wait for it to push up to those upper deviations. Even having lag now between these charts is quite annoying. See if this fixes the issue.
We are open for trading. With our news in New York City is Michael Barr.
Tom Paul, thank you. Deadly shooting took place just ahead of the 4th of July. 3 people were killed, 4 were bulletproof. Condemn line regulations.
This seems terrible. Let me just try and anything to fix it. I'm going to try and go on to hotspot. Just waiting for it to show up. Okay, we're now on hotspot, so I'm hoping this is alright. I can tell if I go back in here and if the audio goes weird.
Take off running just to get down the street because there's so many cars on the side of the street.
There you go, seems alright now. Okay, yeah, cool. Charts are updating. Somehow mobile data is better than Wi-Fi. I don't get how that works, but okay. So 1958, we do have that first deviation. If we can break this, ideally where I want to start trading this would probably be around $20.70. This is our third deviation on the 6 month. That'll be the much nicer and ideal trading opportunity, considering again when we traded those first and the second deviation, we did actually lose off that. So ideally waiting for that further push to $20.70, and I think this is where I'll start looking to retrade it. We then also had NNDM still at $2.98. We did actually enter this. The way we've traded it so far was on this pullback here. Actually, it wouldn't have been yesterday, it would have been the day before. But we did buy into the calls when they were cheap. So if the stock pushes up, then we're kind of protected, and then we'll look to basically enter the short a bit later, because again, it is easy to borrow, which is making this a lot easier to be traded. But yeah, ideally waiting for that push to go that bit further. I'll put an alert out either side, because if we break 305, I'll look at it. Want to enter this short a bit heavier, and if we fall to the downside again, we can kind of just get out early. It doesn't really matter too much. I can also check actually how the position's doing. I don't imagine it will much. The calls were pretty cheap. I think we literally paid $10 for 2 of them. Yeah, so the calls are flat on the day, and yeah, that's about it. So that trade hasn't really moved. Again, very small size trade, so it doesn't really matter all that much anyway. Now let me go through the levels Bradley was talking about. So we have cost. Oh yeah, that's coming into it on the 6 month. I'm liking. Oh, and the 1 year. 146.40. Second dev on the 6 month. Let me put that out, and then on the 1 year. Don't imagine they've readjusted and we've hit it before, so it looks like a first time hit on that as well at 542.84. So those could be pretty nice levels. I don't know why an alert didn't go off on there. So it did have the level. Oh, Did have an alert to the downside on that, but oh well. Check that out. Cost no good. Yeah, I kind of see on the open it wasn't that clean. I think a stock like this is always going to be hard from a day trading perspective though, because I don't know, it's just it usually seems like quite an ugly. I think whenever stocks are that expensive though, they're always just a bit ugly to day trade, at least from what I've seen. But could be potentially a nice swing. And we'll see though. If we do start to break that anyway, I do have the next level. What we got it at 566. So it could definitely be a nice swing from there. And then the other one was, actually let me set that out as well, just in case we start breaking near the highs. GNRC. Oh, that's already hit, so I'll be touching that. What were you looking at to buy the retest of the 144.84? Or looking to play the retest in the... Oh no, you look for the continuation, don't you? So, playing to the downside, I assume. Yeah, there we go. We're getting that QQQ play out now, like we said. As we were still kind of bullish on the SPY until we get to that 433, we're still seeing the Qs break out. So this is what I'm watching for in general, because this is where we can see the Nasdaq start to struggle as well, coming into that 443, 43 cents. Just notice as well there's volume on this chart, which we don't need. AMD held that level quite nice, still struggling though to get down to anchored VWAP. Netflix kind of broke that 450, but not really making any mega moves, which is quite weird. You would think more of a squeeze coming out of this level. And Tesla's pretty strong on the day as well, but I guess actually just following the overall market. Actually, as you zoom out a bit, the market does actually look pretty strong on the day. Let me quickly pull up the straddles then on the SPX, because then I can get a clearer picture of how the options, or how the markets are pricing in the moves and how they're expected. So the SPX opened at 4,441. Straddles. There we go. I'll quickly show you what the shadows are looking like. Shadows are still holding between kind of VWAP, anchored VWAP. Again, if we start cracking below the normal VWAP, we'll probably start seeing a fall in price in general. If we can start holding above these 17, probably 50, we could see a bit of a break. But the real test will be how we react as well coming into this anchored VWAP. That's really my main focus for now, because this will probably move most of the other stocks as well.
To learn that the president's lawyers, the moment they found out about sports.
Dodger strikes quickly. The magic continues.
Okay. What's Pfizer doing? Actually, not checked that chart in a while.
Hear it right here on TuneIn. And be sure to ask your smart devices to play TuneIn.
I listen every morning.
Nothing too crazy. Really just going to flick through this play, look through the watch list, see if I see anything.
This evening, officers from the Monterey
enjoy non-stop music with absolutely no commercials. And hit the field for live sports play-by-play from the biggest leagues. Ready to upgrade your listening? Sign up for TuneIn Premium now.
4.16. Watching UPS, it's down more than 2% as employees move closer to a strike over pay, and cryptocurrency
UPS? What's happening on the UPS?
Global is down about 1.7% this after a downgrade. That's a Bloomberg Business Flash. Tom and Paul.
Thanks so much, Karen. Greatly appreciate it. A number of years ago, and of course,
Oh, you're short. Oh, you're already in the short then, Bradley. What, GNRC?
Really get out my book, summer reading list kind of thing. Olivier Blanchard leading the way on that. A number of years ago, Paul, like things.
It's a really nice short anyway.
Say this, but 7-8 years ago, Emery Horton was still in high school. And
Oh, is that a VWAP and
summer, which was
deviation lineup? If so, it could be super strong.
with Daniel Day-Lewis, he's one of the two secretaries with red hair, ends up being Teddy Roosevelt's secretary of
Oh, yeah, that's a lovely entry thing you got there, Bradley.
here involved. And the best part of the back
What's your target? Just loved, eh?
is Washington in summer. And in 1904, 1905, the place stopped.
Spy looks like it's trying to break the highs.
In Washington, Emery, air conditioning's changed everything. Is July in Washington just like February?
I feel like you're trying to insinuate that I am not working in the months of June, July, August, which if anyone is listening, that is incorrect. Obviously, there is a bit of a summer lull because you have Congress for the most part out of session, but
Lower 140.20. A damn big target on that one then.
you have still politics taking place, but I would argue these have been
GNRC.
women and senators in their states, and just not happening as much in Washington. But Washington obviously is very much part of the story.
I don't care for it hanging around. Yeah. Either way, they're not. Even if you did get an hour, lovely trade. What, point and a half?
This is important here. The defense minister of the United Kingdom, who Emery, you know, Ben Wallace, hugely popular, I would say, is an amateur. Joe Biden said no.
I want to see what this CGC is. Oh, because we did an analysis on this, I think, like 2 weeks back on the channel, and keep seeing a lot of people keep talking about this stock, but yeah, really, since we covered it, this stock has been hammered even more. Quickly pull this up. Yeah, this stock, depending on the streams who's maybe commenting on this video, because again, this video is doing quite well right now. I think we covered it. It was around 80-70 cents. Since then, fell down to 38 cents. Again, these kind of stocks are just ugly. Nothing we really want to be holding long term. I only look to trade those short buys if they pop, but then we got to be a bit more bullish on them to wait for that move. Hard to borrow anyway, but does have options. So even if it does pop, might set an alert out on it. If it did pop to like $2 or something, I'd get short bias on it.
Oh, okay, very good. Thank you for leaving today. Is it just to say, hey, we're there?
Quickly seeing if any other alerts have gone off. Doesn't seem so.
Agenda for some of these secretaries as they make the journey to China.
Nope.
the low-hanging fruit is obviously the win of
Let me check out FIS. So if I go reversal from the 867 level, I'll check that in 1 sec. FIS could be quite nice actually. We do keep pushing up because this level we've been trying to test for a few days now. We'll keep trying to test its first deviation, but I don't think we've hit it so far. Looks like we might hit that target on the AMD then. 115.75 anchored re-wrap. Did you cut out of then of the GNRC because it wasn't moving? Are you still in? Got a nice pop down to what even is that? 141.70. So far, let me have a quick look on that.
meaningful dialogue they have not met in person. So that's really the start of it. It's a test for her though because she gave a massive speech on China and how they are going to be really focusing on the national security concerns at the same time to make sure.
Don't know if I colored that level wrong, but it's completely different. Bless me.
One final question.
867. Oh yeah, lovely trade from the intraday. Did you catch it, or are you just watching that one?
Do you perceive the Secretary of Treasury as staying through the entire first term of this president?
I asked her that at the G7. Well, actually, I asked her if she'd come back
Wait,
for another 4 years. And she
So far, it's actually crashing now though. Still in 3-hour bust. Cool, keep an eye on it then. Should be quite good though. Yeah, I didn't even have an alert on that so far. Actually, I guess I wouldn't have traded it. It's retesting the level, but it did look nice.
Amory Horton, thank you so much for the brief. As our Secretary of Treasury, Hank Paulson, goes east to China.
We've got a few stocks actually with upcoming earnings. We got IDEX. Okay, that's better. Not worth anything. Don't care for that then. Why is there so many stocks coming up with earnings, but they're all worth about 20 cents? Okay, well, those are the 3 stocks that we have earnings in the next 5 days, but they're all worth less than 20 cents, so I won't be touching that. I think earnings season kicks off next week, I believe, with the banks, so should be nice from next week.
It's at best the first half of the year has been, uneven. If you asked a lot of the folks out in Hollywood, I mean, just Indiana Jones and the dialogue.
Check out my gap scanner as well. Actually, all my alerts are, all my watch lists are a bit different. Oh, barely any gappers. Today, what IMPL? Do you have a level at 187?
If you put in good movies that people want to see, they will go to the theaters. Now the issue is.
Looks like we could be coming to test that. Could be a potential play on IMPL, but not available tomorrow, so probably won't be trading that. We then have C4 Therapeutics heading off on the open.
Comes down to we have so many choices now that you really have to incent me to get up off my seat away from my high def TV, my great surround sound, to go into a theater.
Let me have a quick look at that then.
So again, Indiana Jones, you bring back a franchise that's been around for 30 years. Is that really what people want to see? $82 million. That's okay, but it's not great.
When a movie costs, I was going to say 100 million, folks, but that's
probably
small. That's 200 million.
42.84.
They're over salads somewhere.
You look to play continuation if they break, or you just watching that as well?
Marketing costs. Sure. And it brings in 100 million.
Yep.
How much do they actually?
What's that costing now, actually, as well?
Probably, a couple $100 million there. I mean, here's the simple math. The studio loses that. The studio.
Like Paramount.
Exactly. Yeah. And so for every.
You guys playing that range, or kind of broke back below that range.
A 500 million global gross on some of these big 200 million.
Want to see how this starts doing from a swing perspective, though, because that's the main thing I'm testing out now. Continuation plays only today.
$200 million to make and $100 million to market.
It's bouncing near enough perfectly then off that 484 for now. Or a small bounce at least. I guess, to be honest, if Spy can't break that anchored rewrap, you'll probably see you break below. If so, potentially could get that continuation, could be nice.
Where does that come on the accounting statement?
Right smack in the income statement.
You throw you down here.
The operating income, and they all break out their studios, so you can see it very clearly. And quite frankly,
BTAI, another gap today, 18%.
Never have. They don't care because at the end of the day,
down at the lower deviations. These are one of the rare times I'd actually be more long on the small caps because potential to break up towards its mean. But again, still a lot of risk on that.
Yep, and if you have a hit like Avatar was for 20th Century Fox 15 years ago, didn't move the stock an inch.
We've got the level at 957.
It's crazy.
If we can break and hold that, to be honest, might even look to trade that long bias. Because then our next target after that, the closest one is 1117. So, relatively big move.
The Bloomberg Talks podcast. Today's top interviews from around Bloomberg News.
Joining us now, Uber CEO Dara Khosrowshahi. We're joined by the JP Morgan Chairman and CEO Jamie Dimon.
Also got trade the highs in the Discord, looking at Wolf. Not looked at this stock in ages. What the deviations looking like on it. You can see how long ago I looked at this because there's so many lines. This will mean I've literally tracked it twice from the strong movement. Clear all those levels. So they're old. Oh yeah, this was when the stock was at 125. I did those levels. Are you back? Good to see you, Bradley. Oh yes, actually Wolfpack. Coming in some deviation levels, and we quickly pot those out. $60. First deviation on the 6 month. And what, $70 basically dead on as well. First deviation on the 1 year. See if that trade goes well for them for trade the highs. Hopefully should though. It's holding the anchored VWAP.
Chairman Powell looks brilliant off of this.
Some breaking news for you. A share sale. Investment.
You're still seeing.
Yeah, the entries could have been quite nice. 64.90.
Do you want some volatility, Tom? Please. Do you want me to go there?
Tom Key, Jonathan Farrell, Lisa Abramowitz, and the names that shape the world's markets.
The Chief Executive Officer of J.P. Morgan, James Dimon.
Bloomberg Surveillance.
We're seeing the sell-off continue to accelerate.
Subscribe today on Apple, Spotify, or wherever you get your podcasts.
Oh, it's 10 o'clock actually. Yeah. Is there news today or is that... Oh no, it's just FOMC today, isn't it? That's at 2 p.m.
To remember and honor.
Quickly pull up. Oh, actually, we got economic calendar in the Discord. I can look on there.
Join us as we
Yeah, so 2 p.m. That's going to be the key thing. FOMC meeting minutes.
free of blood cancer.
But apart from that, yeah, 10 o'clock we have the durable goods order month for May and factory orders month for May.
We are.
So we'll quickly find out the numbers.
Our mission is to cure leukemia, lymphoma.
These aren't really big events. These 10 o'clock releases, so probably won't even see a move off it.
Of patients and their families. Join us.
US factory orders came in
When we walk,
up
cancer runs.
0.3%. The forecast or consensus was plus 0.6%.
We light the night. Find your local event at lightthenight.org. That's light the night.
And then what was the other thing? Durable goods. Oh, that's what we covered. Oh yeah, so yeah, factory orders. Again, these things aren't going to move the market, but just to cover them, factory orders. Normally looking, or forecasted at 0.8, came out 0.3, and then we also had the actual durable goods forecast. For some reason they're looking weird on here, but anyway, came out forecast was 0.6%, came out 0.3.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg.
GNRC is a slow burn, still in with a stop loss at 144.27. Actually, let me pull that chart back up. GNRC.
Green on the screen here, but the volume is light. This is a market that's much more optimistic.
Yeah, I guess you're seeing a lot of buyers keep stepping in near the bottom. You'll stop, what now? Stop loss. That's your entry, isn't it? So at least, yeah, you can't lose money on that then.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
What are you guys thinking about hardware?
Yeah, it's not.
How should investors approach
Oh, barely anyone's sitting on the level too. Oh yeah, spreads are quite wide as well. How are you dealing with the spreads then? It's literally like 20-30 cents.
from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience?
Just had the snap alert go off. You bouncing quite nice as well off that 42.84 you pulled out, Bradley.
Markets editor and host of Bloomberg
Yeah, snap really flying.
on the upcoming potential strike at
I'll leave GNRC.
on that. Plus, Ira Jersey
Want to check out Wolf as well to see how good the highs trade is going, but it looks good. If I saw it near that anchored, I probably would have traded that, but I didn't see his message in time annoyingly.
co-CIO and senior PM at Northstar Asset Management will join.
Now GNRC not loving the consolidation. Yeah, I guess. Especially if it's consolidating at the lows, might as well just lock in the profits there. Or at least not risking, you know, $2 for it to go down another few cents. But either way, pretty nice trade. Would you, what, you still got, what, 2-3 points on that trade there? And you're in with a few thousand shares, must have been quite good profit. Again, as well, earnings before the open and after the open, there's neither today. I think this week's basically dead for the earnings. Yeah, Thursday we got Levi's, Stimulations Plus, and Friday IPA. That's about it. I think next week, I said, is when earnings season properly kicks off, so should be some nice moves from there. Snap, Bradley, you might want to check out Snap coming in some levels. potentially continuation if we obviously break the levels, if that's what you're looking for. We got $12.40 for the second deviation and $12.35 for the 6-month deviation.
You know, what they had said was they're just not sure that they have enough, you know, strong data effectively to keep hiking rates at the June meeting.
Now, risking a little over $1, so only 300 shares, small profit. I guess it's still pretty nice, eh? So yeah, so how much are you looking to normally risk then on each of your trades? What's that, like $500? And then you're targeting what, 1,000, 1,500 per trade. As well, focus on the S&P right now. We are pulled back on the first hit. See if we can break above it. Was 450, now 300, just a step again. It makes sense.
100%.
I guess as well, especially if a lot of the trades where you're looking for the 3 Rs, that 150 isn't going to make a massive difference. I mean, you're still going to be great on the upside, but yeah, going to protect you a lot more on that downside. So makes a lot of sense. I guess as well, if you've got to trade the 45 days, there's no point really getting mega trades anyway. Might as well just, yeah, kind of get there a bit more slowly. And make sure you actually get there then. Wolfpack retesting that anchored VWAP.
I will see you there.
Yes. All right. Awesome. All right. Thanks for coming in. All right. Let's get to these markets here. I mean, you know,
Already get it down 45 cents on that. That moves quick, this Wolfpack.
She covers all these markets. She's a cross-asset reporter. Emily, what are you looking at this morning?
So it's a choppy session on the index level, but taking a look at some of the individual movers, Rivian, that
TMC.
The stock has been on an absolute
Oh, TMC has gone crazy. Does this have shares available? Hard to borrow, but does have options. Potential swing I'm going to be looking at then here, guys. Squeezed above its third deviation. Oh, actually, the only thing... Never mind, I didn't notice that. Did test its third deviations before, so likelihood of a pullback then it's going to be a lot less. So this one could just be a potential squeeze. We could keep flying.
You wanted to talk a little bit about Moderna. It looks like they've got a first investment in China coming up possibly as soon as today.
Right, yeah. That stock actually up even more than Rivian, now about 4.6% higher. And there was a report that they signed a memorandum of understanding.
The $3 puts actually on it are pretty cheap.
Agreement to work toward researching, developing, and producing.
You're paying $10 to basically short it. That's nothing. As long as it pull back 10 cents, you're in the money. We would be looking at around a 40-cent pullback at the absolute minimum. Could be a nice trade actually then.
That stock though is still down 30% year to date.
Yep. Have you either of you guys?
Again, this is what I'm looking at. Might actually enter this end.
I haven't done any flying.
No.
On the TMC's, roughly $85 to short the $3 puts. Right now it's at $2.35. So again, you're risking about $10-20 to be able to short it, and these expire in 16 days, so you've got quite a while for it to start playing out. We'd normally look at the shares, but again, this one's hard to borrow. Actually, Brady, how have you found with the TTP for the hard to borrow stocks? So I've seen with them, they don't charge you to actually short your hard to borrow, so you're able to short them with these in. Also, NNDM going off. Up 4% today, at 306 right now.
I have. Maybe like a Disney cruise as a kid, yeah.
Okay, so you have, yeah.
Not as a grown-up.
I did one Royal Caribbean as a teenager. It was so fun. I loved it. It was 1 week, but it was like a week-long party.
So if you had a week kill on a vacation...
Yeah, I'm going to try and... For some reason, the Wi-Fi just sometimes goes through like a short period of not working properly. But it should be good all right now. So yeah, this NNDM, this is the one we're already actually short on. We got the puts quite cheap, so we could basically get the entry best on both sides. Now it's pushing up, probably looking to add in now then. So let me open up my Tasty Trade platform so I can actually enter some trades. Because most of the time I'm now trading on Tasty Trade. I think I got a bit of money on the Thinkorswim, but I don't trade that one all that often anymore. Probably do the J trades actually on Thinkorswim. I honestly hadn't had any issue shorting, but I also haven't heard any of the tickers list hard to buy. Never even seen it. Yeah, I don't know. I said, yeah, it was just when I was looking on their website, it said you don't pay for it, so I didn't know if that meant you're always able to short them as well, or if, yeah, if they're just not charging you. But either way, it seemed alright. I'm actually debating doing that, though. I do like, now they've added the swing into the challenge as well, could be quite nice, even though it's still only shares. And it as well, that you only get 10% of the 10% of the risk basically overnight, or the leverage overnight. So like on the, if you bought the 20k account or something, you can only trade $2,000 overnight. Yeah, so the NNDM then, the options are basically up 100% already. Obviously, we're down on the shortage shares, but we're looking to actually buy in now, so that's actually fine. So we might just short extra 100 here. I mean, probably literally just do small 50 right now. I'll send out that order.
I mean, you see the, I don't know, we're gonna have another jobs number on Friday.
Oh, that was 100. I didn't want to do that. So ideally, I want it to push higher. That's where we can get the really good entries on these. But I wouldn't mind doing literally just like another 50 here. So no matter what happens, this trade should essentially not be risk-free, but be super low on the risk.
Everybody's got a job, and wages are going up 4.5%.
We've had 14.
There we go. We filled into those then.
There's an amazing chart floating around the Bloomberg terminal of the upside surprises in jobs, and it's just a large streak of upside surprises. So it'll be interesting to see what happens on Friday if we get a 15th upside surprise.
And actually mind having some volume on this chart. I can't actually see.
Quick check up on these markets. The S&P 500 off just about 1/10 of 1%. UPS, United Parcel Service.
Let me hide the account and then we can go there. Yeah, so again, this is all I'm looking at then on NNDM. We're just shorting the shares. We're now short 100 shares. We bought those 2 calls. I think we bought them on the Thursday last week. Again, we bought them at the low. So if the stock skyrockets, which wouldn't be bad, we'll be up pretty decent on this. And considering we're holding less shares short than we are in the calls, we can basically max profit either direction right now. Could be quite nice. Again, these do expire on Friday though, so we'll have to act quick on these. If the DWAC merger goes through, it's going to send DWAC back to the $60 range where it was before the troubles came. DWAC, I mean, there's not a stock. This stock, it just has rumours non-stop on it. To me, it's just something, if it pops, I'll short it, really. Or at least do it through the options, but this stock, every month or so, you see some sort of rumour comes out. Again, even if we actually zoom out this chart, we'll probably be able to see that. Yeah, I mean, today we're profit on it, so actually could get a nice trade on it. But I mean, we've seen it time and time again. Rumour, and rumour. Probably going to happen here is we just stink straight back down. So to me, I don't really care about this rumour. If it eventually goes through, then cool. But I think 9 times out of 10, these rumours are just going to keep turning out to be false.
Yeah, I wanted to ask you more about the supply chain there, Creedy. So, of course, like, no one wants to get their packages late. That's frustrating. We all experienced that during COVID. But
and as well, don't forget, you know, going back even just 6 months, this stock was at $30, already fell to 15. So if it's popping, I'm really looking just to short into this. At least that's how I'm looking at it. It's hitting its deviations today anyway, 1485. Let me update these levels.
So they will take your package or a business's package or a freight package via plane, train, automobile, throwing a ship in there. And what's important to keep in mind is that FedEx and DHL have taken a very different approach than UPS has. Post-pandemic, when everyone was kind of paying top dollar to get their shipments, FedEx and DHL really invested in their labor. And that's something that FedEx is now paying for. They're saying we overhired, now we're pulling back. So you see all these layoffs. DHL, they're not doing layoffs, but they are kind of dealing with that crunch now that packages are...
Yeah, then on DWAC, these are the key levels I can see. Obviously, we hit into the $15. Actually, oh, damn, we've actually hit both of these perfectly. Have you seen that, Bradley? Hit these both perfectly. Pre-market, the 1570, retested the 1485 intraday. Strong pullback. Ideally, though, I wouldn't mind breaking both these levels, and then I'll be looking to trade it from the 1850 or above. Short bias, because again, that would be at least a 3-month high.
And you really saw that strategy work because if you look at the stock of the three companies, UPS has won out. They've outperformed over and over and over again, except now because of those margins, they're saying, look, we can't pay up. Whereas the union is saying, well, our wages aren't rising in line with profits, so why should we work if we're not getting that? So they are making some concessions, UPS, to these drivers, things like part-time drivers changing a little bit of shift. They're now getting MLK Day as a paid holiday. No more mandatory overtime. There's no two-tier system anymore. Basically, part-time workers were making about $5 less an hour than full-time workers. So there are pieces of the equation, but it's still not at the salary level that a lot of these workers want.
Well, I mean,
I'm seeing actually a lot of the crypto-related companies are down, so you can have the miners. Oh, actually, no, they look like they flipped positive. They opened down pretty big on the day.
made so much money during the pandemic. We want some of that.
Pretty much. And look, it's also
When was this? Oh, 30 minutes ago. Oh, that makes more sense. They're nearly open. Did miss out on that though. But yeah, they've just flipped positive anyway. What are the Bitcoin futures doing then?
$39 an hour sounds pretty juicy. Let's talk about it from an annual perspective. Full-time delivery drivers making about $95,000 a year, even though.
Oh, so the levels again. We did these, I think, on last week's stream. Called out these levels. They did play out pretty nicely then. This 3,175. It has changed now slightly though to 3,187 or 870. Still pretty nice though, even when we look at it like that. So again, still waiting for the breakthrough that. We are basically hovering on this level, as you can kind of see anyway. Considering we keep trying to take it, I imagine eventually we will break. And if we do, still looking for a target around, let me just update that. We're looking at $35,360. And again, that would be our first deviation on the 6-month chart. So that would be the target. If we can break this, relatively strong move to the upside expected. And to be honest, on these as well, we can have relatively tight stops. You've got statistical mean at 30,000. Well, basically just 30,000. Was it dead on or not?
What's UPS saying?
Oh, 580.
Are they saying we pay competitively? What are they saying here?
So UPS is saying that.
Oh yeah, so basically use range band right now then on Bitcoin. So yeah, really until I don't know what's happening there. Till yeah, really we can kind of crack and hold out of one of these levels. We crack to the downside again, not really looking to trade that. But we can break to the upside, targeting 35,360 if you're long bias, and potentially could start looking at it a bit more short bias into that level.
Of course, we're going to keep you updated on because this is not over yet, but we'll see how this goes.
What have we heard from the administration?
Yeah, and the straddle's basically staying in line as well. Can even take the wicks off. So market's kind of moving as it's priced in as. As long as it stays on VWAP, that's what the market's pricing in essentially.
Intervene until they really have to. When you saw this with the rail strike, I keep bringing this back to the rail strikes because we just went through this a couple of months ago. Marty Walsh, the labor secretary at the time.
Oh, it looks like your GNRC would have hit target now as well.
Because Congress had to intervene. It was some sort of very old rail law.
I think trade the high probably would have stopped out on that.
For some reason, and that's what they ended up instigating. But you kind of want to make this work on its own before the Biden administration gets involved, especially because of the political consequences.
Absolutely. I mean, yeah, that is definitely the 11th hour Hail Mary.
Yeah.
Oh, I didn't even notice he was trading at long bias.
So yeah, it doesn't seem like we're quite there yet, but certainly
Didn't read it. I was skim reading it.
3 weeks, if it does escalate to that point.
Oh, so I completely missed your AAL. Let me check that out as well. AAL. 1813, 6 month second deviation. Let's see, I've already got some levels on it. I'm guessing they've moved. Yeah, they have 1813. 1 year still dead on $18.
This time around, that's not true. It has been voted 97% by the union.
Yeah, I won't be touching it because I think we've already hit it, but could play it quite nice. Oh, that would have been a lovely long. These are the ones as well that I'm really trying to go back and test. You don't get them all that often, but if you get like a deviation line with VWAP, super strong, whether that's for a reversal or trend, whatever side it is. But in this case, you even had psychological level as well. That would be really nice. These are the ones I want to test again. Probably literally get like a trade or two a week, but That's all you really need if something's going to be that strong. I don't think even since we've been streaming, we've probably seen, what, 4 or 5 of these? Don't think we've seen a single one of these fail yet.
One of UPS's biggest customers is Amazon. So Amazon has their own logistics company, but they're kind of leftover. Goes to UPS.
Really? Because again, I see the Amazon trucks everywhere now. Yeah. I mean, they've got. I have to ask Lee Klaskow this of Bloomberg Intelligence. They got to be one of the biggest trucking companies in the country.
Amazon?
Yeah.
I think
We throw an NDM down here.
All right, Kriti Gupta, thanks so much for joining us. Kriti Gupta, markets reporter, does all that Bloomberg TV stuff. We appreciate getting some reporting there on UPS. Again, huge company. I didn't know this. The largest private sector union agreement there is the Teamsters with UPS. So we'll keep an eye on that. This is Bloomberg.
So yeah, NNDM, then our average now is $3 basically.
Good morning. Netflix stock is higher after Goldman Sachs upgraded the streaming service to neutral. Analysts at the firm say Netflix management implemented its password sharing crackdown more efficiently.
And if it just stays flat,
and they predict the positive momentum to continue.
we would we'll probably just let these go into expirations because again it would take us at break even basically.
Fails to produce a deal. Bloomberg's Jeff Bellinger reports.
Steve, the two sides worked late into the night before the Teamsters.
Nasdaq turns positive. We're seeing SPY break through the anchored VWAP.
The Teamsters tweeted that UPS walked away from the table after presenting what the union called an unacceptable offer that did not address members' needs. UPS says it is proud of the offer it made and it did not walk away. It is urging the Teamsters.
The high is also short Google. Let's check out the chart. Well, by the way, what do you guys trade? Do you trade GOOG or GOOGL?
I'm old school.
You're old school. Well, you might not like this. Ben and Jerry stirred up some controversy.
Oh, he's looking to get short
On Independence Day,
in the 122.70s.
and stolen by indigenous people on this 4th of July. Let's commit to returning it. Some tweeters were calling for
Any deviational level on there?
ice cream. One even referred
No, it's not looking something I'll be touching. We did cover trades. We did cover the DWAC again. It's already running, but it's just on the same rumors we always get. Potential merger. To me, all I'm paying attention to is if we pop. Actually, I'll go on a shorter time frame than that. If we pop really into this range, already short buys could look there, but it'd be small size. But really, if we can pop to $18.50 or above, I'm just trading that short bias. PLTRs at a level. Let me check that out as well then.
What to expect when you're expecting a teenager. Learning
Can't believe how like readjusted Palantir's got. This was trading at its 3rd and 4th deviations when it was at $17, and these levels are readjusted so quick now. So I kind of stopped trading it because the deviations just started moving too strong. But I did get some nice trades on it. About a month back, or what was it, 2-3 weeks back? What, 15.50 was that? Yeah, 47. And right below what you got dead on $15, you got the first deviation as well. What are you looking to trade on it then? Are you looking to trade potentially the break of it? Where do you get these kind of stocks, like the this Southwest Airlines? Is that just on your watch list? Because I think when I'm looking at stocks like this on my watch list, oh, I did send it to you. I tend to just have like Delta on there. Actually, Delta as well. Fuck. Wait, Bradley, have you seen Delta? That deviation, what the hell? Yeah, just okay. Yeah, I think I usually have Delta and I think UAL, and then I just tend to leave it at that. $49 3rd deviation. I'm paying attention to that. And then also $50.13. That could be nice. I'm definitely watching that. Definitely be a swing trade, I think, though. Let me go back to the lab. I guess as well, actually, from how I trade, yeah, the options on Southwest Airlines is just like no volume on them, so I guess I don't really tend to look at stocks if they got no volume. Haven't seen, yeah, Delta's gone crazy. I guess as well, if the Delta did fail, then you got that Southwest airline to push to that, the 39s. When it pushes to its third Delta would probably be well past by then. Oh, that GNRC is finally starting to break down as well.
I am so grateful because, as John just said, it really is a great radio name.
It's the perfect. It's almost as good as John Tucker.
Almost.
You know?
All right.
Though there is not a movie called, to my knowledge, called Molly Smith Must Die.
Let's hope.
Board as well at its third deviations. Third deviation on 6 month and second deviation on the 1 year.
Pellet was our famous Bloomberg radio person, but apparently they got a movie about John Tucker. Go figure. All right, let's get right down to it.
Just updating my levels.
Coming out this week, we got a Fed, going to be making some decision later on here in the month. So that means we need to check
1545.
all of that interest rate stuff for Bloomberg Intelligence.
Actually, let me check out the SPX. I forgot it's an FOMC day. I just completely keep forgetting about it. Definitely some potential trades I can just get on the options on there. Let me have a look. We opened at 14.44.
And this is not a smart question.
Oh damn, yeah, the puts have got super cheap. I'll probably look to be buying into those. So these I'm going to be buying into. Yeah, and these are just the 4,440 puts. The reason I choose these is at this strike from the open. And again on FOMC, if we do continue like this, okay, we don't have much downside risk. We're risking just under $300. If it does start to pull back though, these are the ones that pop up 500-600% quite easily in a day. Snap's just hitting alert as well. Don't remind me, you. What's you? Hey, you getting your continuation? Are you looking to play that then?
If we get anywhere near consensus CPI report, then I think the Fed's going to hike. I think it's that second Fed hike that the docs suggested might occur that's much more in doubt at this point, because you are seeing a moderation of inflation, just not as quickly as they want. So so I think that was a signal that was signaling a little bit more that the Fed wants to be hawkish if they need to.
Yeah, Snap is what I wanted to check out. Yeah, Snap's coming into that second deviation as well.
The market is now almost fully priced for that, and also priced for some
nice 5-cent range potentially on that.
As well. So the market's already there regardless.
On any news today, because it is just
major moves unless the data really
actually I guess it's only up 2.5%.
We've heard from Powell as well as a few other Fed speakers since that June meeting, and I think the market is still fairly confused as to what's going on.
No news on it.
Do we really think the minutes are going to give the answer that everyone's been looking for?
I think that the minutes are going to be probably pretty mixed. You know, interestingly, even though the dot plot and some of the rhetoric out of Jay Powell at the last
Maybe this could potentially be something.
Our natural language processing models.
Federal judge orders Biden to limit communications with social media firms.
I know you're a model geek. You have a natural what is it?
Don't know about you. Looked good for a minute, but got brought up. Yeah, I see that. That could be a potential test. I don't know how often we see it. I've never really paid attention, but we kind of keep testing the support, and then when you finally break, you kind of just get a snap down. Could be a potential breakout play. But I don't know how often those play out. I never really paid attention.
Overall, so he was pretty balanced in talking both hawkish and dovish, even though the dots and some of his rhetoric suggested that the Fed's going to hike again. Now, the fact that they're going to hike again doesn't mean that they're going to hike another 150 or 200 basis points. So it kind of makes sense that yes, they're getting to the.
Yeah. Okay. Yeah. I think the main trade for today, for me at least, is going to be the snap. Could be nice. Might swing that. But yeah, going to be those puts we just talked about on the SPX. Really just waiting for the FOMC to come out.
Yeah. So it sounds like you said, July seems almost like a given at this point, and Powell even said, he would not rule out consecutive hikes at concurrent meetings. So are we already maybe even thinking what's the bar for September?
Yeah, I think we do have to think about what the bar for September would be, and I think that bar is higher than the bar for July. And it's also
yeah, it looks like we're kind of retesting that, cracking down now. So yeah, now that could be quite nice. Yeah, these are the things I want to see. I said don't know how often we get them, but those just look like super clean trades. Keep testing the support, finally break, retest, and then crack down. Because those look like picture perfect, but I don't know how often we actually get them.
basically every other meeting they could be hiking in quarter point increments.
Yeah, Snap just hit as well. It's second deviation on the 6 month. PRTL, it's testing the level.
You know, they don't want to go too fast, and they also want to have the ability to stop hiking at any moment, which was harder to do when they were hiking at 50s, right? Now that they're hiking in 25s, they've skipped now a meeting.
Right, see how that plays out.
It's a little bit easier for them to do that calibration. And nobody knows, right?
You quickly put an alert on NNDM, because if it cracks up, you want to get that short.
Funds rate should be. I think that they've probably done enough in order for inflation to come down. Now they just need to give it time to occur, but they don't see it that way. And you know, until they wind up with
Use kind of, I mean, Delta's kind of flat now. Bit annoying. I wouldn't mind if that can push up.
they're gonna still think about hiking, even if they actually don't do it every meeting.
All right, Lisa Brahma says I have to ask this question. She just emailed in from her vacation. Yield curve still inverted, 103 basis points. Do we care? Do you care? What's the market telling you?
Hey, at least you hit to the penny. Actually, the only thing I'm Palantir now is it doesn't seem to be all that volatile intraday. Like even from its low today to now, it's only 20 cents.
The whole reason why you get inversions in the yield curve is just the expectation that, yes, we're going to have 5% interest rates now, but we might have 3% interest rates, you know, 2 or 3, 4 years from now. And because of that, you get this inversion of the yield curve. You know, the fact that it's lasted now for the better part of 18 months, you know, does suggest that the market thinks that we might be heading into a recession, or if not a recession, then at least a very significant reduction in inflation over the medium term. And you know, at some point we're going to start to really uninvert quite aggressively, I think. But
Delta's breaking the highs. U's kind of stuck in that range, it seems.
The Federal Reserve's done hiking. Until then, the 2-year yield is probably going to keep on hovering, you know, kind of just a little bit below where the highest Fed funds rate might actually be.
You know, and it really took until the last Fed meeting for the market expectations to kind of be more in sync with what Powell and the Fed have been saying. Looking at the world interest rate probability function now on the terminal, you know, it looks like those, you know, those expectations for rate cuts this year dramatically have come down. So, you know, does the market have some of that natural language processing model that you do?
Oh, tons of gaps are now just... Can't see if they're all new, or if my gap scanner wasn't working before. But ALLR out of nowhere is popping. So it's the initial data of phase 2 trial. Shows potential for improved clinical benefit. Oh damn, I didn't even look at the long term on this chart. That is absolutely crazy. Barely ever see that. The stock was what, at a high of $3,276, squeezed to it, now down at $5. Well, actually right now at 12, but a low of 12. Good off stream, all good, Bradley. Chat to you. Well, I'll chat to you in the Discord anyway. I'm only going to trade probably anyway another 30 minutes and then have a break until FOMC. But yeah, that ALLR chart is crazy.
You know, the first cut is now priced for January, and then if they, you know, wind up hiking again in September, like Paul was suggesting, if that happens, then maybe the first cut's not priced then until March. So it's always this kind of rolling 6-month window for the first cut.
Ira, Molly and I, let's be honest, we're focused entirely on Wimbledon for the next 2 weeks. But if I had a spare moment, is there anything in the world of soccer that we should be paying attention to?
Well, the Gold Cup's going on right now. We're in the semifinals or quarterfinals, excuse me. So the U.S. plays Canada, and you have to later this month starts the Women's World Cup out in New Zealand and Australia. So the roster drops for that are pretty interesting. You know, especially in the U.S., we have a lot of younger women who are going to be headed down to Down Under to play some football.
All right, good stuff. You ask a question, you'll get an answer from this guy. Ira Jersey, he is our soccer guru. He's also our, I think he does interest rates and stuff like that for Bloomberg Intelligence. That's what gets the paycheck, so I'm told. So he is our go-to guy on the Fed and on global soccer as well. So again, we'll keep an eye on that. S&P 500 basically unchanged on the day. We got the Dow off about 0.4%. That's 125 points for those of you keeping score at home. Right now, let's head down to Washington, D.C. We got World International News from Nathan Hager.
All right, Paul, thank you. The U.S. Navy is accusing Iran of trying to seize 2 oil tankers near the Strait of Hormuz this morning. A spokesman for the Navy's Fifth Fleet says Iran fired shots at one of the vessels before the U.S. stepped in and allowed those ships to go on their way. The Navy says Iran has seized at least 5 commercial vessels in the last 2 years and harassed several others, many in or around the Strait of Hormuz. Israel has pulled troops out of a militant stronghold in the West Bank after its most intense operation in nearly 2 decades. 12 Palestinians and 1 Israeli soldier were killed in that 2-day raid on the Jenin refugee camp. The Israeli army says it inflicted heavy damage on militant groups, but Prime Minister Benjamin Netanyahu is vowing to carry out similar operations if needed. Treasury Secretary Janet Yellen leaves for China today on a 4-day mission to try to find common economic ground while continuing to de-risk from the world's second largest economy. Greg Valliere, chief U.S. policy strategist at AGF Investments, says just talking could be a win.
She really wants to get a dialogue going, not that she's going to concede on every issue. And I do think that they will agree when she leaves in a communique for more talks this fall, leading to a summit between Joe Biden and Xi toward the end of the year.
AGF's Greg Valliere spoke on Bloomberg Daybreak. This trip follows China putting new export controls on 2 metals that are key to many aspects of the tech industry. Ukraine and Russia are pointing fingers over the threat of an attack on Europe's largest nuclear plant. Ukrainian President Volodymyr Zelensky is repeating his warning that Russia could be planning to sabotage the Zaporizhzhia facility that it's occupied in the country's south since the start of the war. The Kremlin is accusing Kiev of planning a provocation. UN inspectors say they've seen no evidence of anti-personnel mines, but they are continuing to monitor the situation at Zaporizhzhia. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager.
Did you know you can use AirPlay and Chromecast to listen on connected devices? Tap on the device icon from the Now Playing screen on the TuneIn app and listen to all your favorite stations like Today's Hits, Latin Hits, Country Roads, and more.
I smell sex and candy here.
There's a lot to listen to on TuneIn.
Music. At 17 years old, working a part-time job. Reaching over the railing, he caught it!
But if you want to discover some new favorites, follow us on Instagram, Twitter, and Facebook at TuneIn for all new recommendations. Who knows? You may just find your new favorite radio station. Follow us now and hear all the audio you love right on TuneIn.
Follow us.
Follow us.
Today's news can feel like uncharted waters. But more often than you'd think, we're not the first generation to confront what we're dealing with today.
We're just the first generation to make a podcast about it.
I'm Rachel Maddow.
I'm Isaac Davy Aronson. Each week, we'll bring you a story from history
that helps with something in the headlines today.
Rachel Maddow presents Deja News with Isaac Davy Aronson, an MSNBC podcast. Listen now on TuneIn.
The biggest classic rock hits do just that. They hit hard. And on TuneIn's Classic Rock Hits, you'll find only the best in high-octane awesomeness. We're talking rock gods like Led Zeppelin, Kiss, AC/DC, Lynyrd Skynyrd, and so many more. So for those of you about to rock, search Classic Rock Hits or ask your smart device to play Classic Rock Hits on TuneIn.
If you love sports, then you've got to upgrade to TuneIn Premium. It's your ticket to top play-by-play from the biggest leagues.
It's got a really good look to it. It is a grand slam.
We're talking NHL, English Premier League, MLB, and the biggest college sports.
Bennington's reset. Manson scores!
Plus, commercial-free ESPN radio for hot takes between games. Stay competitive on your fandom with TuneIn Premium. Upgrade now to get in the game.
And a curveball smacked into left center field.
As a sports fan, you know action. And TuneIn is here to bring you all the action. From nonstop live sports coverage from the biggest leagues.
Ovechkin with a steal. Chance here on the break-in. Kuznetsov fires. Scores!
To in-depth podcasts on what's going on with your favorite teams. And all the game-changing content in between.
Randall, step back three.
TuneIn is the playbook for sports fans.
Have a bag
badge, but we have faith in his killer instinct. Celebrate the 10th anniversary of famed detective priest, Father Brown. Stream the new season now, only on BritBox.
That sounds like a marvellous plan.
Plus, watch even more unofficial detectives in much-loved series, including Agatha Christie's Marple, Murder in Provence, and more. Expect intriguing mystery. Expect the Undetectives. Start streaming today at BritBox.com.
Adopt US Kids presents What to Expect When You're Expecting a Teenager. Learning the lingo.
GOAT, G-O-A-T, acronym, stands for Greatest of All Time. As in, spaghetti sandwiches for dinner? They're my fave. Dad, you're the GOAT.
You don't have to speak teen to be a perfect parent. Thousands of teens in foster care would love you just the same. Visit adoptuskids.org. Brought to you by the U.S. Department of Health and Human Services, Adopt U.S. Kids, and the Ad Council.
Meet Sam. Sam is 30 years old. Sam may not act the part, but he's a billionaire. But on December 12th, 2022, everything changes for Sam. And what he calls a screw-up, the U.S. government calls one of the largest frauds in history. From Bloomberg and Wondery comes a new series, Spellcaster, The Fall of Sam Bankman-Fried. Follow Spellcaster, The Fall of Sam Bankman-Fried on Amazon Music or wherever you get your podcasts.
Bridgebank helps breakthrough ideas actually break through and remains dedicated to providing financial solutions to the risk takers, the game changers, and the disruptors, those committed to making the world a better place. Bridgebank has been providing financial solutions to technology and innovation companies from inception to IPO and beyond for over 2 decades through its national network of banking teams and offices. Bridgebank, a division of Western Alliance Bank, member FDIC. Bridgebank, be bold, venture wisely.
Not completing high school is more of a social thing than it was an academic thing. Even though all these years have passed, I still had that longing to have my diploma.
At age 30, Carissa finished her high school diploma.
If you're even considering getting your high school diploma, you can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Even in a time when almost nothing is easy, one thing has been effortless.
We watch sterling now shooting up.
Accessing the world's latest financial and political news.
European central banks fight to tame inflation isn't over.
Wake up with Bloomberg Daybreak Europe Edition. Available now on your podcast feed each weekday morning by 7 a.m. in London. Get the news you need to start your day in just 15 minutes. Subscribe to Bloomberg Daybreak Europe Edition today on Apple, Spotify, and everywhere you get your podcasts. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major averages, they are mixed. In the S&P 500, you have 9 of the 11 major industry groups lower. Technology is in the lead. The best performing industry groups belong to communication services. That's where you're going to find Meta Platforms and Alphabet. And information technology, that's where Microsoft lives. Meantime, after ripping higher so far this year, equity strategist Jonathan Stubbs at Berenberg says equities will now struggle.
Now, looking ahead into the second quarter, we need a new narrative, or we need an extension of that. We find that hard to see here. So perhaps instead of the dip and rip, we get the rip and dip.
Shares of Tesla, most active, up about 0.2% right now. Tesla's China's deliveries, they're surging. And Bloomberg Intelligence writing today that easing inflation pressures, minor job losses so far, and the read from our economic regime model all remain supportive for equities. S&P 500 right now 3 points lower at 4452 on the index. Dow Jones Industrial Average is down 115 points right now, 34,304. The Nasdaq 100 56 points higher. That's up 0.4%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Molly and Paul.
All right, John Tucker, thank you so much. We appreciate it. Molly Smith, Paul Sweeney here in the Bloomberg Interactive Broker Studio. Boy, you think about 2022, that was just ugly for asset allocators. That 60-40 portfolio did not work out at all for anybody. So you think about here, year-to-date 2023, heck of a first half when you look at particularly equity markets, but also fixed income. So brings into question asset allocation. What do you do here in the second half of the year going into 2024? Fortunately, our next guest does that stuff for a living. Nimrit Kang, co-CIO, senior portfolio manager at North Star Asset Management. He gets his chemical engineering degree. I mean, who does that? At Virginia Tech, really good tech school. Then he gets an MBA from some trade school up in Boston. Yeah, exactly. Hey, Nimrit, thanks so much for joining us here. Asset allocation, where are you guys these days after what's been, I think for a lot of people, a surprisingly strong first half of the year?
Yeah, thank you for having me. Yes, going into 2023, we were very cautious on the markets. You know, like everyone else, we expected this lag between monetary policy and economic effects, which is really still missing in action. Equity markets have been strong. We had been underweight equities going into 2023, and we remain underweight equities slightly versus targets. And the reason there is that just history shows there are considerable lags between monetary policy and economic effects. We have never had this kind of steep rise in interest rates over such a short period. Yes, we've seen some effects of that from the regional bank crisis to, you know, the busting of the crypto assets, but we think these are effects that are going to bear out over a much longer time. And in general, we just feel like we're in this period where, you know, a lot of people are calling this a polycrisis age. There are a number of things that are coming together. But generally, all that means is higher level of uncertainty and volatility in the markets. That to us just says that, you know, we just need to be very risk aware and focused on running very diversified portfolios for our clients.
When I hear asset allocators talk about higher volatility, it sounds like more opportunities. So where are you finding those pockets right now to invest in?
Yeah, no, really good question. So when we think about higher volatility, of course, you know, right away we think about just going back to the basics, investing in those companies where we have pretty strong conviction on the cash flows going forward. And if we have conviction on the strong cash flows and we don't pay too much for those stocks, we know that over the longer time, those companies are going to hold up both in down markets and up markets. They can be both offensive and defensive holdings. And then, of course, in the fixed income side, we are taking the opportunity to extend maturities for our clients, locking in higher interest rates where we can. And if down the road there is an end to this monetary tightening cycle and we do see interest rates come down, there is that appreciation potential as well.
Nimrit, I'd love to get some thoughts on the equity space here. What are some names that you're looking at? What are some themes that you guys pursue when you're looking to, you know, invest on the equity side?
Absolutely. So the way we build our portfolios is it's intersection of a number of different factors, but really our process starts with identifying some of those long-term societal challenges that we feel are going to need a tremendous innovation to solve. So for example, we have been in that digital transformation space for a while, and you know, we did not expect this new boom coming from artificial intelligence that has basically been the big story for 2023, but several of those companies have been benefiting from that. You know, that's your bellwether, Microsoft, Adobe, CRM, all those types of stocks. So that's a theme that's been in the portfolio for a while. We just see that these companies are going to continue to solve the problem related to productivity, labor productivity, and some of the other challenges that we see. But then on the other side, there are other examples. For example, you know, all the challenges related to climate change and some of the things that we're coming to see, they're coming together very quickly relating to, you know, very high temperatures, hotter summers, droughts, floods, all types of issues that we're seeing there. Some of the companies that we think are going to be at the forefront of challenging them, especially related to water efficiency. You know, lately we've heard a lot about the Colorado River levels drying up, creating all kinds of challenges there. we have been investing in a number of stocks. There's some smaller cap companies that are not your household names like Badger Meter or Xylem. These companies provide instruments, meters, valves, all kinds of other solutions to help drive water conservation, measurement, and efficiency. And we think the demand for those products and solutions is only going to increase over time.
So Nimrit, you're just saying that you came into 2023 underweight equities. Looking at the S&P 500, it's up 16% year to date. Are you rethinking going into the second half of the year if that's still where you want to be, or sticking to your guns and those lags are going to kick in?
Yes. So, it's interesting. There's an adage in the stock market, nobody knows.
If we crack the VWAP on the SPY, looks like it potentially could hold now. If we've broken through the anchor VWAP, if we break VWAP, then looking for the Qs to come into VWAP, and really, as long as we don't flip below the 370s, we should be good. Pretty much overall.
And over the last 18 months, and not have a major slowdown in the economy. Yet the economy has defied all those odds so far, especially the resiliency of the economy. So I think there's so many different puts and takes that are affecting the economy in general. It's hard to really understand when that inflection point happens between the negatives, i.e. the credit tightening cycle that we're expecting, just, the pressure overall, going from a very easy monetary policy, an era, almost a decade, more than a decade, of where there was basically money, there was no cost related to money, to actually having higher interest rates. That's a sizable shift in regime. I was just reading a study which showed that 1/3 of an increase in profit margins for S&P 500 has come from lower interest rates and reduced taxes. Nothing about the taxes yet, but we know interest rates are definitely changing. So when we look further out, it's hard to ascertain when that inflection does happen, but it's hard to imagine that we will not start to see some impact from this type of a sea change in monetary policy. That's just really on the financial side. Now, let me talk about some of the social issues that we're talking about.
Right.
Yes, despite all the different things that we're talking about, economic inclusion is probably at its lowest
Tesla retesting its anchored VWAP. If we hold this anchored VWAP, could see a nice break, a low, and continuation to the downside. Again, a lot of this will probably depend on Qs and how that reacts.
So when we put all that together, Molly, we're still staying underweight equities. And again, staying underweight, but remaining very much invested in these high-quality names.
All right, Nimrit, thank you so much for joining us. Nimrit Kang, co-CIO and Senior Portfolio Manager at North Star Asset Management, joining us. This is Bloomberg. Let's get some company news right now. Steve Rappaport.
Paul, Tesla deliveries in China are surging as concerns about supply chain issues, the impact of COVID-19, and weak consumer demand begin to fade. Tesla's Shanghai plant delivered more than 93,000 vehicles in June, nearly 20% up from the same time last year. Shares of Tesla currently down less than 0.25%. Make way for another platform in the social media sphere. Meta is preparing to roll out its Threads app tomorrow, Bloomberg's Ed Baxter reports.
Threads is aimed to be a direct competitor to Twitter. US and UK app stores already have some pre-order options up. European Union is experiencing some problems, though, with no Threads as of late yesterday, including Germany and Belgium. Ireland's Protection Commission says the service will not be rolled out in the EU for the time being for some kind of security negotiations. Meta says it plans to roll out ultimately in more than 100 countries, but has not published a list as of yet. In San Francisco, I'm Ed Baxter, Bloomberg Radio.
Thanks, Ed. In other Twitter news, the TweetDeck app won't be free for much longer.
Yeah, it seems like we're still cracking down. Could be pretty nice, especially on the Tesla play. Again, the Q's kind of diverging from the SPY right now. SPY's holding now back to its anchored VWAP. Q's coming down to test its VWAP, and then if we can break the anchored VWAP. This will be a nice decider before the FOMC if we can hold this. Obviously, more bullish coming into FOMC. If we break it, going to play the downside, but it is making those calls we talked about play out quite nice. So again, if we're looking at the 4,440 puts, on the SPX, because again we are more extended coming into the FOMC. So the reason I play it like this is if it comes out negative, those options will fly over 100%, if not, you know, 500-600%. If it goes against us, obviously we can only lose what we put into it. So max risk on 100%. We're looking at the 0 day to expirations, by the way. But yeah.
We're talking NHL, English Premier League, MLB, and the biggest college sports.
Bennington's reset. Manson scores!
Plus, commercial-free ESPN radio for hot takes between games. Stay competitive on your fandom with TuneIn Premium. Upgrade now to get in the game.
Hey, it's Tom Hanks. It's my birthday. Come celebrate with me on Boss Radio 66 tomorrow at 1 p.m. Eastern Time. You know, you only have one birthday a year. To listen, tune in to the Boss Radio 66 exclusively on TuneIn.
Baseball fans, it's that time of the year again. The weather is getting warmer, and the boys of summer are taking the field. And if you're a fan of the MLB, you're in luck, because TuneIn is bringing you live coverage of every game. That's right. With TuneIn, you'll never miss a pitch, a hit, or a run. Whether you're at home, at work, or on the go, you can follow your favorite teams and players.
You're starting to see like the ARR ticker starting to slow down, starting to give in its kind of big move. So we'll start seeing it can probably hold its anchored rewrap and push to the downside. However, it's not available to borrow, has no option. So to me, I can't really be trading this. Which is one problem with this stock. LP, don't think there's any really nice gappers today. The IMPL got a nice retest, but again, not available to borrow today. They're just ones that are moving, are just not that easy to be able to trade. Wolf is kind of consolidating between its anchored VWAPs, but still provided pretty nice trade on those first retests. AAOI, do keep seeing this stock move quite recently. So up at its third deviation, pretty extended. Hard to borrow, but does have options. So could potentially look for that short-term momentum, but overall going to be bearish when it's up at these kind of highs.
Thank you very much there, Sebastian. Looking at these indexes, as Matt Miller would say, as opposed to indices, I don't see the difference. But anyway, in any case, S&P 500 down about 0.1%. NASDAQ absolutely unched on the day. Yields, a little bit of movement there, kind of mixed. The 2-year Treasuries off 2 basis points, 4.91%. How about that? The 10-year's up 3 basis points, 3.88%. So that really noticeable inversion continues, negative 103 basis points. Oil getting a little bit of a lift here yet again. WTI crude oil up 2%, $71.27. We'll keep an eye on that. OPEC Plus continuing their production cuts for, I guess, at least another month. All right, right now let's head down to Washington, D.C. We'll get world and national news with Nathan Hagen.
Paul, the nation's coming off a rash of deadly mass shootings over the long 4th of July weekend. Today, the man accused of killing 5 people and wounding 2 others in Philadelphia the day before the 4th is expected in court. District Attorney Larry Krasner lays out the charges against that 40-year-old suspect.
Will be facing multiple counts of murder, and will also be facing multiple counts of aggravated assault as a first-degree felony, weapons charges, among others.
DA Larry Krasner, that shooting came on the same day of another deadly mass killing in Fort Worth, Texas. Overnight here in Washington, D.C., 9 people were wounded in a drive-by at a 4th of July party. In the wake of all these incidents, President Biden put out a statement urging Congress to come to the table on sensible gun restrictions. We should note that Michael Bloomberg, the founder and majority owner of Bloomberg Radio's parent company, Bloomberg LP, donates to groups that support gun control. More than 300,000 UPS workers are a step closer to a strike. Bloomberg's Amy Morris has more from Washington.
Weeks-long talks between UPS and the Teamsters fell apart early
But I say I quite like that.
in Washington.
So actually, I quite like that from Bloomberg when they're talking about those gun laws. They provide the information straight up that they actually provide funding for it. Never really noticed that before, but I do like that.
Still time to reach a deal. The current labor contract expires at the end of this month, but without...
I meant more that they provide the information, not about the law itself.
More bargaining sessions are scheduled. In Washington, I'm Amy Morris, Bloomberg Radio.
Harvard University's legacy admissions are under more pressure. There's been a bill just introduced in Massachusetts that would tax rich colleges that favor the children of alumni and donors in admissions decisions and give that money to poor community colleges. This comes after the Supreme Court's decision to all but shut down...
Has CCL as well breaking its third deviation. Could get a continuation. No more levels of resistance above this.
With policies that favor legacies. There's been another disruption at Wimbledon. 2 activists with the group Just Stop Oil were arrested. They ran onto one of the courts and threw orange graffiti on the grass. Play at Court 18 was suspended by rain before that debris could be cleared away. The All England Club had already boosted security after protests at other major sports venues across the UK this year. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager in Washington. This is Bloomberg. Paul and Molly.
All right, Nathan Hager, thank you so much. We appreciate it. Molly Smith, Paul Sweeney here in the Bloomberg Interactive Broker Studio. It is Wimbledon time. I'm all in Wimbledon. It looks great on TV. I love watching it. Talk to me about the state of women's tennis in the U.S.
Yeah, so it's kind of, we're at this like interesting point right now because, you know, Serena has retired.
Yep.
I'm stunned that Venus hasn't.
Right.
She did play. She lost in her first round. Honestly, amazing.
Yep.
She's 43 out here still doing it. But there are some younger players that are coming up. I know we've been saying this for years. Where are they? Who are they? But I really do feel good about the state where things are right now. We've got Jessie Pegula and Coco Gauff both in the top 10.
Now 11 o'clock as well, just noting, because we'll probably end the stream up in a sec. We may go live actually for FOMC again, so we'll probably be back live again later. But what is key is here. Again, this is what I'm looking to trade coming into FOMC. These are getting very cheap. What this is a put from the open, basically. So coming into FOMC, we're green quite bullish. But again, this is a big release. Normally, you do tend to get that big bit of volatility. So direction going into it is a gamble. But again, I play this because if it comes in the direction, hundreds of % gains possible. But again, if it goes against us, max we can lose if we entered right now is $175 per contract. Again, we could play it on the spies to get it even cheaper as well.
This is Bloomberg Markets with Paul Sweeney.
We got a lot of green on the screen here, but the volume is light. This is a market that's much more optimistic or bullish than maybe its central bankers are. 9.5 million job openings. What are people doing? Are they just sitting in Starbucks all day?
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
What are you guys thinking about hardware, software? How should investors approach this thing called AI?
This is Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to get the latest on the markets with one Vince Signorelli. He's a macro strategist at Bloomberg. And then we're going to do a little roundtable on the global energy business. We can do that with a couple smart voices. Mike McGlone, he's a senior macro strategist with Bloomberg Intelligence. And Fernando Valle, he's a senior global energy analyst for Bloomberg Intelligence. We're going to talk about global oil. Where are we going from here? Supply and demand, all that good stuff. And then we're going to check in with Jerry Smith. He is a media reporter at Bloomberg News. He's got a very interesting story about Amazon weighing the cost of the TV business. And then I want to ask him about ESPN. What's Disney going to do with ESPN? Is there a spin out there? Are they going all streaming? A lot to talk about with Jerry. But first, let's kick it all off with John Tucker and get a Bloomberg Business Flash.
All right, guys, the major averages right now, they are mixed. Tech-heavy NASDAQ 100 in the lead.
Main levels on the Abivi 132 if we go to the downside and 141 if we continue to the upside.
Yellen heading to Beijing this week. And Greg Valliere at AGF Investment says, you know, that trip will produce some positive sentiment.
I do think that they will agree when she leaves in a communique for more talks this fall, leading to a summit between Joe Biden and Xi toward the end of the year. So I think that the bottom line will be that it was a pretty constructive meeting.
Monster Beverage shares, they're higher ahead of their earnings. Bloomberg Intelligence says their earnings per share could jump 50%. And the second quarter appears to have been a pretty good one for automakers. Looking at Toyota right now, motor sales, that rose 7.1% in the second quarter, and a lot of that coming from sales of Toyota's hybrids. Right now, the S&P 500, 3 points lower, 44.52 on the index. Dow Jones Industrial Average down 96 points. That's lower by 0.3%. The NASDAQ 100 up 39 points. That is up 0.25%. I always find it instructive to go to the most read stories on the Bloomberg.
Always.
And among them, it's not a market story. Sharks show up in Hamptons as summer holiday crowds at beaches. Here's a news flash.
Okay.
It's the ocean. Sharks live in the ocean. But that's my take anyway.
All right. Well, you can't. I mean, I remember just up at Cape Cod when they brought back the seal population.
Oh, well,
that's the good news.
That's
the
good
bad
food.
news is that attracts the sharks. And one of the most beautiful beaches on the Cape is in Chatham. I don't think you've been able to really swim in there for years.
And those aren't just any sharks. Those are great white sharks up there.
Those are even worse than your typical shark.
Well, the sharks Paul and I encounter at the Jersey Shore, they're like this big.
Baby sharks, like the song.
Yeah, it still hurts when they bite you.
Baby
still hurt
sharks. Not that one.
Now that's going to be in my head all day. John Tucker, thank you so much. We appreciate it. All right, let's get a look at these markets here. Let's bring on Vince Signorella. He's a macro strategist for Bloomberg. He joins us via Zoom. Hey, Vince, a lot of eco data coming up. A lot of people trying to position for the end of the month where the Fed is going to go. What's your takeaway? What are you looking at in these markets?
Well, I think we're seeing just a little bit of overreaction this morning to the data that came out of China. It was a little bit of a slowdown, and of course, then people think that's going to slow down the rest of the world. And there were some service PMIs out of Europe as well that was slower. I think you can't just take one number and sort of make a case for the next 6 months out of it, which it looks like that's what markets are doing today. So I would sort of take it with a grain of salt. We get, as you mentioned, some data next week that's going to be more interesting than what we have this week, which is CPI, PPI. We get real average earnings, and export and import data, along with the UMISH sentiment index.
10-year yield rose to 3.8%, exceeding June 30th highs.
See things going. We'll see, the UMISH. Will that build on the consumer confidence numbers that we saw, which were pretty explosive as of late? For today, we have the FOMC minutes at 2 o'clock, and everyone's hoping to get some clarity on what the hike, skip, pause comments that came from Powell really mean. I don't know that they're really going to see what they're hoping for, but we'll find out at 2 o'clock.
Yeah, we're also going to get a couple more job indicators this week, Vince, and I'm just looking over time right now at the 2-year yield, and looks like we're creeping back up to that level of where it was right before the banking crisis started in early March. Does that say to you from a market perspective that basically never happened? It's a nothing. We can all move on, or what does it even say to the Fed for that matter?
I think it's just when you look at the 2-year yield, it's just tied to the Fed funds rate, and if you buy where Powell has been saying recently about at least one, if not two more rate hikes this year, you have to move the 2-year yield or the 2-year bond in sync with where the Fed funds rate is going to be. So we should see the 2-year trade a little lower if that's the case, if data doesn't upset the works of what Powell is thinking. But when you look across markets, I think, especially when you look at equities, I think the markets see that as a very temporary phenomenon, and that at some point after those next 1 or 2 rate hikes, you're really going to see things peak and rates definitely on the pause and most likely coming in lower next year, even though the Fed has said they don't see rate cuts until 2025. I think you have to take their forecasts with a grain of salt because they're just not usually very accurate.
Hey, Vince, talk to us about the dollar here. What's the market pricing in here on the dollar versus some of the other majors?
Yeah, well, again, if you're buying into the rate hikes for the next 6 months or so, the dollar is going to be a little bit of a bid. You definitely the rate differentials between particularly Japan favoring the dollar. I mean, the ECB is still on the rate hike path as well. So that should keep the euro fairly in check with the dollar. But in general, you probably see a little bit of dollar strength, but I think that's going to be short-lived as well. I think, when you go toward the end of this year into next.
So as we're looking at... Oh, sorry. Go ahead, Vince.
No, it's okay. I just think we'll see the dollar roll over. That's all. Go ahead.
I wanted to ask you then, as we're looking at potentially another rate hike or two this year, we hear a lot about on this show from a lot of our guests talking about these lagged effects of monetary policy and how much time it takes for the rate hikes to trickle through the system. What's your take from the market side? Have we felt any of it in any of the major asset classes, and when might we?
Well, the old theory when I was flipping through textbooks was 6 months for it to wend its way through to the economy. Some people are putting it more like 12 and 18 months now. So if you think that the Fed is about a year and change into it, we should start seeing it soon. We're not quite seeing it yet in the housing market. Housing's still quite high. We're starting to see it in the rental market come down a little bit. So I think the lag effect has to come through, or that effect of the Fed's monetary policy should easily come through within the next 6 months. And hopefully that'll push the Fed back a little bit on more of a pause state as they seem to have done enough. And as we speak, the 10-year yield is reaching session highs of 3.89%. So no one's listening to me out there. But I think, realistically, if you think about what the Fed has done in such a short period of time, it's an astronomical increase in rates in the Fed funds rate, and that eventually really has to hit the economy.
All right, Vince, thanks so much for joining us. Really appreciate getting your thoughts there. Vince Signorello, macro strategist for Bloomberg News, checking in with us from the work-from-home office. Good for him. All right, let's switch gears. Let's go global energy here. I'm looking at WTI crude oil. It's up about 2.2% today, just above $71 a barrel. Gets my attention. Had been trading below 70. Let's bring in a couple smart people who know about global energy. That would be Mike McGlone, senior macro strategist with Bloomberg Intelligence, and Fernando Valle, senior analyst with Bloomberg Intelligence. Mike joins us from Miami via Zoom, and Fernando's here in our Bloomberg Interactive Broker studio. Mike, let's start with you. Down in Miami, dealing with the heat down there. Good for you. How is it now?
No, it's nice and humid, but I hear it's much warmer up north. It just get colder nights.
I'm gonna give you a hard time all summer here because I know you enjoy it in the wintertime. Hey, Mike, just give us a sense here. What's just from commodity trading perspective, what do you think about oil right here?
It's a bear market. What stops it? To me, that's the bottom line. The question is, has the market plateaued? And typically, there's no indications of that at all. Typically, what it takes for a broad commodity market to bottom, you need some form of significant lag to significant Federal Reserve easing and as Vince pointed out, maybe a weak dollar and a pretty significant pickup in China demand. They're all going the wrong way right now. The only thing that's going and really cheap prices. The only thing that's going the right way is prices have gotten low. So let's start with, we're talking about WTI. It's around $70 a barrel, and it's almost half last year's price, but it's the same price as it first started to trade in 2005. The bottom line is natural gas, its cousin, has already collapsed. It got really cheap and it's bounced. It got down to 2. It's bounced up to near 3. It's in the middle there now, and I think that's the trajectory for crude oil. And the key thing I ask myself is what stops this? As we tilt towards the second half, as Vince pointed out, these long and variable lags, the Federal Reserve is still tightening. And our chief economist, Anna Wong, says we're going to get a recession likely in the second half. Yes, it's been delayed, and U.S. unemployment to start picking up around 4.3%. None of that, to me, is good for crude oil to sustain a bounce. It might have bounces, but none of that's good for it to sustain a new bull market.
Fernando, I want to bring you in here. You're our senior analyst with Bloomberg Intelligence here, Fernando Valle. Let's talk about the Saudis and Russia are extending these oil supply cuts to prop up the market. So do you think it's going to work? This isn't the first time. And like we said, prices are so low.
Well, I think part of the bounce today is that these cuts, the additional cuts started in July, and today is really the first real trading day with volume because we had the holiday yesterday in the U.S. But even then, you're not seeing a huge jump up in prices. You're seeing a relative strong, but nothing really to write home about. And a lot of the bull case that was predicated on the lack of spare capacity in global oil production. And when you cut production, what do you make? create spare capacity. So we don't think that this is necessarily a bullish signal, as Mike was alluding to. Demand is really the biggest driver that we're looking for. China demand is still not there. We're seeing some weaknesses in the U.S. as well, and on the housing side, on the office real estate side. Those are the big concerns for the summer. And when we looked at the inventory report from last week from the EIA, we saw lower refinery utilization, lower refinery consumption of crude oil, and that's weird when you have crack spreads, the margin that refiners make, at nearly 2.5 times the average for the past 15 years. Why aren't they running? And it suggests maybe the physical market is not as tight as we expected.
Well, John Tucker, he moves the needle by himself just on a daily basis, how much he drives back and forth.
$3.50 at the Wawa this morning.
$3.50 at the Wawa on Route 36 in Jersey, just to get your price check there. Fernando, what are your companies telling you? What are the big majors telling you about what they're doing? Where do they think energy's going? Where are they investing these days?
Well, there's a big bifurcation between the Europeans and the American major oil companies. When you look at the major oil companies, they're saying we're investing. Oil is our business, and we're going to continue to invest. And we're going to invest in reducing the carbon emissions from existing production as opposed to investing in new ways of energy. And so far, it's proven to be the right call as far as a return standpoint. We've seen some of the Europeans like BP and Shell.
Still looking to take that 440 long. I'm probably waiting for it to come down to $100. So we'll see if it can come down. But if it can come back there before kind of 12 o'clock, it should be nice for the FOMC.
And the returns on the renewable side are not nearly as good as we expected them to be. So we're going to invest on our oil side again. The question is, where do you invest now?
Mike, I want to bring you back in here. You were talking to us before about these different factors right now that are keeping prices low, that we've got the China demand picture isn't so great. The Fed is obviously not easing. Which one of these are, you think could, among the other factors you mentioned too, what do you think could turn first and really get things moving in the other direction?
That's the big problem, Molly. Typically, in this case, I think it's one of those most unique cases I've seen in my career in this business of almost 4 decades, and that is the Fed is unlikely to pivot or start easing until markets tell them to, i.e. stock market going down. And this is somewhat the view from our chief economist, because the measures they watch for inflation are very sticky. Personal consumption expenditure is still hovering just below 5%, and Fed funds are heading higher. So I don't see what it's going to take. And to me, the biggest risk for the second half is something I started really worried about, starting pointing out a year ago. This is probably be one of the biggest economic resets of a lifetime. And we've had a bounce, and we've had all the markets, equity markets, think that we're not going to have a U.S. recession. Now, if we do tilt towards that in the second half, just the normal lag to the most aggressive federal rate hike easing or tightening ever, crude oil could just be a pawn in that space. Now, crude oil's down 10% on the year. It's not a big deal, but its brethren, copper, the metal with the PhD in economics, it's wiped out a pretty good rally in January. Now it's down in the year too. And gold is the best performing commodity. So from a commodity standpoint, gold up, crude oil and industrial metals down, that's a recessionary trajectory. And then I look over at the yield curve. Okay, that's tilting towards inversion, recessionary trajectory. And I look at the Fed, still tightening. There's nothing good in there except some kind of surprise I can't predict for the commodity bear market to end.
All right, so Mike, when people come up to me at cocktail parties and ask me for my commodities call, because they never do, I just quote you and just say, am I still long gold, short everything else?
Well, I think gold is much likely to continue to rally, to break out above this 2000 level and never look back. It's a matter of time. And crude oils and most commodities are going to continue to do what they normally do. They get too expensive, and then pendulum swings to too cheap, and it has to get too cheap before they can bounce again. And we're nowhere near that too cheap phase, as Fernando says. There's still a lot of profits to be made. The average cost of production from U.S. producers is around $50 a barrel. So I just look at 40 as the key level it should go back to. That was a key level in 1990. I was in the trading pits then when Saddam Hussein invaded Kuwait. It bounced to 40, and get this, the bounce at the bottom, the ultimate bottom, didn't come until about 10 until 1998. Now things have really changed. The U.S. now is one of the biggest net energy producers on the planet and a net export.
Yep. Hey, Fernando, real quick, 30 seconds. What do you think? Which company do you think is best positioned here, these big energy companies?
Well, I think Exxon has done a terrific job in turning around its investments by growing in Guyana, by acquiring the Permian. Chevron equally has a sizable Permian position and is in good position. So I think the U.S. over Europe overall.
Okay, great stuff. As always, we always get the nice, clean, concise call from both of you guys. Mike McGlone, senior macro strategist with Bloomberg Intelligence from the Miami office. Some folks refer to him now as Miami Mike. I don't know if that's going to stick. Fernando Valle, senior analyst with Bloomberg Intelligence. He covers the global energy space, covers all the big major oil companies. So we like to speak to these two folks, get a good view of global energy. Again, when you look at global energy, I was taught by some smart people in the energy space, it's a commodity to numb nuts. So you just have to know supply and demand, and that's where you go. So these two folks know that. All right, coming up, we're going to have more. This is Bloomberg. Let's get some company news right now with Steve Rappaport.
Paul, Moderna stock is up more than 2% after the drug maker signed a deal to make mRNA vaccines for China. Bloomberg's Gina Cervetti reports.
Moderna signed a memorandum of understanding and land collaboration agreement on Wednesday to work toward researching, developing, and producing mRNA vaccines in China, according to a statement. The developer of a vaccine for COVID-19 may invest around $1 billion, according to a local media report. The Cambridge, Massachusetts-based drug maker said any medicines produced under the deal will be only for the Chinese market and won't be exported. Moderna adding the agreement targets unmet needs for Chinese patients. Gina Cervetti, Bloomberg Radio.
Thanks, Gina. Better take a closer look at your luxury watch. The number of high-end fake watches is rising. That's according to pre-owned dealer Watchfinder. CEO Arjan van der Wal says as many as 10% of the timepieces they received from sellers last year were fake.
What we're seeing in the last years is that the level of sophistication of these fake watches is increasing significantly.
Van der Wal, in an interview with Bloomberg Radio, says Rolex replicas account for about half of the knockoffs on the market. And Amazon CEO Andy Jassy is taking a closer look at how much the company's Hollywood studio is spending on original TV programming. Last year, the company spent $7 billion on original shows, licensed programs, and sports, up from $5 billion the year before. Amazon is in the middle of a company-wide cost-cutting program, and that includes plans to eliminate at least 27,000 jobs. And those are the company stories we're following this hour.
Starting to now see the QQs break down to their anchored VWAP. Now this is what I've been waiting for. If we can hold this, could be a nice bounce, but ideally, again, we're still looking to get in with these 4,440 puts on the SPX. So if we continue to break down, going to make these more expensive, which isn't great for the entry, but again, we'll probably still jump in anyway, getting ready for the FOMC release coming out at 2 p.m.
Search Mixlite or ask your smart device to play Mixlite on TuneIn to listen. Podcasts make every day better. It's just a fact. Whether you want to fill your commute, fuel your workout, or just make yourself smarter, your favorites are all here on TuneIn. The Daily.
From the New York Times, I'm Michael Barbar. This is The Daily.
The stuff you should know.
Welcome to Stuff You Should Know.
Hey, and welcome to the podcast. I'm Josh. There's Chuck. And this is Stuff You Should Know.
Pod Save America.
Welcome to Pod Save America. I'm John Fabra.
I'm John Lovett. I'm Tommy Vitor.
On today's show.
And more.
Not sure what to listen to next? Well, here's this week's top 3 things to listen on TuneIn. Looking for a way to keep up with MLB, NBA, NFL, and everything else in the world of sports? Stay in the know with ESPN Radio. Ready to make it a high-octane summer? Hit play on TuneIn's classic rock hits. Turn it up to 11 and rock out all summer long. Audiobooks are available on TuneIn. Explore over 100,000 stories and never have a dull moment. Discover a new title today. Find these and more trending items on the homepage of TuneIn.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Day of choppy trading. You have concerns about faltering Chinese economy that dampened some of the risk appetite earlier.
Again, just to note, Delta is pushing towards its third deviations coming in. It's basically at $49 dead on. So we can push another 24 cents over on Delta. Could be a nice potential short from either day trading or swing trading perspective.
For the year, and the S&P 500 right now, you have 4 of the 11 major industry groups. They are higher. Communication services leading the way with shares of Meta Platforms and Alphabet. They are both higher right now. S&P 500 overall 4 points lower. That's down 0.1%. 45.51 on the index. Dow Jones Industrial Average down 55 points. That is a decline of 0.2%. And the NASDAQ 100 giving up some of the earlier gains right now, just 7 points higher. We check the markets.
Speaking of the NASDAQ, you can see it's testing its 2-day anchored VWAP. Seems like it could be holding, but it's all on this retest when it comes down. If we break, probably going to be quite a strong downtrend move until we have FOMC.
Media reporter for Bloomberg News, one of the top media reporters out there breaking lots of news, and we got him here in studio. All right, so Jerry, I want to start with ESPN. Back in my banking days, we pitched to spin that thing out. We thought we could get 40 times earnings, double the value back when Disney was trading at 20 times. We always got laughed out of the office, if not physically thrown out of the office by the CFO of Disney. What is ESPN going to do? What is Disney going to do with ESPN these days? What do you think going forward?
I think that's one of the biggest questions in the media business right now is the future of ESPN. It still makes a lot of money for Disney, and that's important to think about because Disney also has this whole streaming business with Disney Plus, where that loses a lot of money. So the money that ESPN and the cable network business makes is used to fund the streaming business. So you get rid of ESPN, and suddenly you have to ask, where are you going to fund your streaming business?
Good point.
But yeah, ESPN is dealing with the same thing that a lot of cable networks are dealing with, which is cord cutting. The number of subscriptions keeps going down and down, and they have a lot. They're spending billions of dollars on sports rights, and they have a lot of high-profile talent. And last Friday, we saw about 20 of those people who appear on camera. Jeff Van Gundy, Jalen Rose, Susie Colbert were 3 of the big names who were laid off as part of a cost-cutting initiative. And part of that is really because ESPN is going to be under bigger scrutiny from Wall Street than ever before coming up. Disney, for the first time in one of the next few quarters, is going to break out ESPN's financial numbers for the first time. So that is clearly ESPN wants those numbers to look good. So they are going to, they made some cuts to some of the high-profile talent.
At least they've kept the high-profile tennis talent. I will vouch for that. They're all very much informed at Wimbledon, so happy from my perspective. But I'm wondering, Jerry, because isn't so much of the value of, cable right now sports, right? Isn't that so much of like where people have been saying this is why cable is still around and why streaming has not completely overtaken the whole picture?
That's right. Yeah, I mean, if the people who subscribe to cable right now are in large part sports fans, some news fans as well, but live sports is really what's keeping the whole industry together. So one of the big questions with ESPN is when do they make that flagship channel available as a streaming service? And the day that they do that could really, unravel the whole business, because you could see more people cut the cord to sign up for this ESPN service, and how much you price it is an open question. But yeah, I mean, live sports is really what's keeping the whole business together right now.
And, you say that live sports, absolutely. That's always been the case. But you think about the regional sports network business, the number one player out there is in bankruptcy. A lot of teams aren't even having their games broadcast anymore. So that whole model is really under pressure. ESPN model under pressure. In that background, the rights keep going up. I mean, who's going to pay these 30, 40, 50% increase in rights if it's not ESPN?
Right. I think we're really heading towards a cliff with this whole business where at some point some sports league is not going to be able to command the kind of increase in their rights fees that they have in the past. That hasn't happened yet. It's the amount that live sports cost just keeps going up and
crazy.
up. But I think there's going to be a point where some of these sports leagues are going to take a haircut. I don't think it's going to be the really high-profile leagues. The big one coming up is the NBA, and I think everyone expects the NBA is still going to get a nice premium from what they got. But people I talk to in the industry is say, look, watch for some of those middle-tier sports that are really going to get squeezed right now.
So if ESPN, you would think this is going to be like the channel here that can obviously weather whatever's going on in the sports industry. If they're not able to put it together, how are the networks faring? Obviously, ABC still part of the Disney empire, but when you look at NBC, CBS, some of the other ones that will, broadcast live sports, how are they holding up?
Well, those broadcast channels, one interesting trend we've seen with cord cutting is a lot of people who not only cancel their cable for Netflix, but they also get these digital antennas. And you can actually get a lot of programming on that, including CBS, NBC, Fox. So those channels are weathering the storm better. And in fact, the NBA, when they're looking for this next sports right deal, they really want to find a media partner that can offer them streaming and also a broadcast channel like an ABC or an NBC or a CBS or Fox, because those channels have a lot more reach. We're seeing with these regional sports networks, just a few weeks ago, the Utah Jazz did a deal where they their games are going to be available over an antenna, over a free over-the-air channel, and they did away with their cable deal. They had a cable network that aired their games. That's not going to happen anymore. So that's something that we're starting to see in the sports business is the cable channels, because of cord cutting, their reach is diminishing, and you're seeing a combination of more free over-the-air channels and streaming channels to kind of reach the widest audience possible. The real question there is, at what point can those leagues still command the same kind of money they got from the cable channels? Right now, they're not getting the same kind of money. So how do they make up that loss?
Yeah, I think at some point this is going to trickle down to the athletes themselves. If I were somebody, I'd be locking up a long-term contract now.
Yeah, that's what's fascinating about the sports media business is everything's connected. Everything from how much the sports player is getting paid to the person at home who's canceling their cable service. There's a chain link, and everybody's connected. And so more and more people cut the cord, and that trickles down all the way to the teams, how much they can pay their players.
Does that mean that people are even maybe, if they're not paying to watch this stuff on cable anymore, does it even say, like, if you still really want to watch these games, you're going more in person?
That's a good question. I think attendance in sports has actually been doing pretty well. I think Major League Baseball's attendance is doing well. They actually made an interesting change this year where they made the game shorter, which I think has helped both the viewership and the attendance. But yeah, that's something that years and years ago there were these blackout rules where you couldn't watch sporting events because they wanted to make sure that enough people actually went to the games. But yeah, if you think about the business of owning a sports franchise, media rights are a huge piece of it, but also people going to the games, the attendance, ticket costs, things like that. So, yeah, that's an excellent question. I'm not sure what the answer is.
Jerry, you cover the whole media space, soup to nuts here. Have we reached peak Hollywood in the sense that, boy, the spending on TV shows and movies just exploded due to the Netflix and all the other streaming competitors? But now we're seeing companies like Disney saying, we got to cut costs, including production costs. Your colleague at Bloomberg News, Lucas Shaw's got a story out about Amazon CEO wants to know why they're spending so much money on program. So if Amazon's asking that question, have we maybe had peak spending in Hollywood?
Yeah, I think that's an interesting question, and I'd encourage everyone to read Lucas's story because it's really one of the first times we've seen Amazon really look at the cost of their Hollywood studio. I think it helps to think of the streamers as different kinds of companies with different priorities. You have Apple and Amazon who just have such enormously deep pockets that the losses that everyone's losing money on streaming, but they can sustain the losses much easier than some of these other companies where media is their whole business. Someone like a Disney or Comcast or Paramount, where they're having real cost-cutting issues. Again, getting back to the whole cord-cutting phenomenon. But yeah, we're starting to see even someone like Amazon. They're spending $7 billion a year on streaming, on programming, and then that's a drop in the bucket for them, but they're still looking at these losses.
Hey, I was reading a research note by Laura Martin at Needham & Company, and she was talking about Paramount. And her question, she was saying, hey, here are the questions I'm getting from institutional investors. And then when it came up to Paramount, the question was, when are they going to sell? Is that really a story? Is there a belief out there, Jerry, that maybe the Sherry Redstone and the Redstone family and the trust would ever sell Paramount?
I think that's something that people have been talking about for as long as I've been covering this beat. It's years and years. I think that this is an industry about scale, how big you can be, and I think Paramount, even after they combined Viacom with CBS, has always been seen as being undersized, and everyone's always wondering, well, when is someone going to buy them? But there's also the companies that can afford to buy them are companies like an Apple or an Amazon. Everyone always wonders, but do those companies really want to get into the cable channel business with all the challenges that they're facing right now? Maybe they could just sell off the studio. That might be attractive. But yeah, it's a scale business, and they've always been seen as undersized. So I think that's something everybody's always wondering. I think the Allen & Company Sun Valley conference is coming up where everybody loves to talk about how there's deals being done there.
That's this month, right?
I believe that's coming up, yeah. So that's...
I didn't get my invite. I'm still waiting. All right. All right, New York Times, we talked about it. The New York Times still cranking it out. It's got a $6.5 billion market cap. Everybody thought the New York Times was going out of business. A lot of other papers have, unfortunately. But the stock's up 22% year-to-date because content is king. So as long as you got the premium content, they'll figure out a way to get paid for it. And the New York Times, their app has been extraordinary. Their digital advertising has been great. So there's my little plug. I've been following New York Times Company for 40 years.
Cooking and games, those are the big ones.
Exactly. Let's head down to Washington, D.C. right now. Hey, Jerry Smith, thanks so much for joining us from Bloomberg. Let's head down to Washington, D.C., get world and national news with Nathan Hager.
And some breaking news to start off, Paul. The Secret Service has now confirmed cocaine was found at the White House Sunday evening. A spokesman for the agency confirms that positive test now to ABC News. The White House was briefly evacuated over the weekend after the discovery of white powder in the West Wing. Preliminary tests indicated it was the illegal drug. Secret Service says it's still investigating how it got there.
I can't believe they evacuated it over that.
That the cocaine was found near an area where West Wing tourists are told to leave their cell phones. President Biden and his family were not at the White House at the time. They spent the 4th of July weekend at Camp David. White House says it is optimistic a deal can be reached between UPS and the Teamsters. That statement came hours after weeks of talks between the shipping giant and the labor union broke down. Greg Valliere with AGF Investment says a strike, if it happens, would pose a noticeable threat to the U.S. economy.
I think it could shave 0.2, 0.3 off of GDP. To that, what's happening in Southern California at the height of their tourist season to have many hotels shut down, that might be another 1/10 or so.
AGF.
Okay, anyway. Yeah, so again, just to quickly cover stuff, because we're already on the stream in a few minutes. We do have, obviously, Q's holding its 2-day anchored VWAP for the time being. We've also got SPY holding. This is making the puts get cheap again. This is ideal. I want to be getting in around $100. If FOMC pops, these will fly. Obviously, if it's not so good, if it is bullish on the release, then cool, you lose 100% of the options, but shouldn't matter too much. Again, we just heard from Bloomberg about the UPS coming into its 2-day anchored VWAP. Could be a potential pullback coming into that level. And one last thing to cover is Delta Airlines. We're coming into the $49 target. This is our third deviation. So what we're going to do, and I think I'm going to start doing this because then we can put it in the live as well, and you can get it in advance for being a loyal viewer. But what we will start doing is, ideally, what I want to do is keep doing the streams from around 9:30 to 11, even though right now it's 11:30. And then throw out probably 2 analysis videos a day. So what we'll start doing is recording these when we're about to end the stream. So I would just record them as I end the stream anyway. So if you're in the stream, you can watch it in advance. And if you want to watch it as a video, again, we'll kind of record at the same time as we're streaming and then cut it out, put it as a video, and it will go up in an hour or so. Again, we probably will be streaming later anyway for FOMC, so that should be interesting. We've just had an alert go off. WBA, so Walgreens Boots Alliance. Have a quick check out on this. So, okay, yeah, so they did have their earnings. Big gap down on that. They're still kind of in that range. And right now, really, they're just staying in their first deviational range. Again, I'll quickly throw this on the chart so you can see. But it's obviously gap down on that move, holding its range now. So potentially could be waiting for that gap. Though I do quite like Walgreens. I say I like them. I like the companies. You got this and like Rite Aid, but they haven't performed all that well in the long term, or at least over the last kind of decade or so. So probably not something I'd be holding in the long term, but I'm still happy to be trading them. So Again, if any of you have any stocks to be recommending, I think we're going to do Delta as one stock to analyze today. And then I'll quickly try and find another one, and then we'll go through them. Just look for really anything that's popping. Could be the DWAC because it is popping today. Oh, also I saw the news on that. Let me see where it was. Because it wasn't to do with a merger. It was to do, again, it's in the Discord live chat area. Yeah, Trump's back, stock rallies on news of in-principle settlement with the SEC. So that's why it's moving. Also, some other key news. Wimbledon match is disrupted by anti-oil industry environmental protesters. I find these people so annoying, but whatever. I don't think they really get their point across doing that. But again, not going to move the market, so that bit doesn't really matter. And then again, we have Teamsters says they're in talks with UPS. Has collapsed, but it seems to be a relatively good thing for UPS because obviously it get down on the news, but we're starting to kind of get that strong bounce back to the upside. Retesting our anchored VWAP on the Qs. And then yes, so I think what other stocks are moving today? We could probably just do Delta. Again, let me know in the comments, guys, if you want any stock analyzed, because again, we're going to record these and also throw them up as a video. So even if you don't want to watch it in the stream, we will have it out as a video later today. So I think we're going to do Delta because that's definitely something I'm looking to trade. And then we could be looking Rivian we did recently, but it is popping. So we could do Rivian and DWAC unless you guys want anything else. But I think those are going to be the two I go for. So yeah, let's update these levels real quick, ready for the videos. But again, we covered the stuff in the stream anyway, so if you're in the streams, you don't really need the videos anyway, because again, it's all stuff that we cover. But I guess it's for people who don't have time to watch the streams, then again, they can still see roughly what we're looking at. So the key targets on there are going to be these. Again, I'm just plotting them, but we'll go through them in a sec anyway. Can you do PayPal, please? Yep, we'll go through PayPal. I was just seeing that. Again, we won't do that as a video, but we will run through it real quick then just for you. So PayPal. So PayPal, as of right now, again, we do our analysis on these charts anyway. So we did actually call it when it was kind of coming into these lows after the earnings for a long. We've got a nice bounce off this, already taken some off on the long-term account. What we're looking at really then is $72 is going to be our key target for now. Again, this is our first deviation on the 6 month. So as we come into here, we would expect selling pressures start to kick in, and we could potentially start to fall in price from here. So if I was long biased, that would kind of be my final target. And again, I've got some in the long term. I'll probably be locking in the majority of profits in or at this level. If we did break that for any reason, we then have $75.50. Again, this is our range of our first deviations. What it would also be is our gap fill location, which was here. From their earnings. So if we come into this range, really high probable area that we start to see selling pressures come in, because again, a lot of probably stocks will trigger above this level, and people holding long will be using this area as a target. So kind of a 3-point range, but I would be looking at that as my key range to be looking at it. Again, if I'm long bias, taking in profits here. If I'm a reversal or short bias trader, looking to short that range. And if we did break that for any reason, then we have $79. $85.50 with $86 as all key levels. Again, these can be used if you're a short or long bias trader in a different way. If you're a long bias, these are all going to be key targets. If you're a short bias or reversal trader, then we're looking to short into these levels to play them to that next level. So my favorite level here would be this 85 to 86. If we can push here, again, looking at a first target of around $80. So we can get some good risk reward on these. We could have a stop above 88 if we're looking to trade the outright shares. Or if we're looking, and how I would probably be trading it is the options, as long as it does it within the expiration time, we should be all good. But that is to be expected, because again, that's what we had here. I think our entry on PayPal was in this range here, so you know, $61, $62 at the highs. Again, it went offside quite a bit. If we were outright shares, we most likely would have got stopped out. But because we were trading it through the options, we were able to hold through on the swing account. And again, on the long term, obviously we were holding shares, but we were happy for it to go against us because then we just get dollar cost average in anyway. That's what I'm looking at on paper anyway. If we did go to the downside, quick supports at $58 and $55. So I hope that helps you, Deep Lounge Music. Then to go over, so we did the delta levels. The other stock we said we were going to look at was DWAC. Already done the levels on here, or do I need to update these? So I need to update that to 1125. And then we also have 975. And then I think we updated everything else in the stream that we did because we went through this stock earlier. So again, now we're just going to make the videos for later. So if you don't want to see these and you don't care about either Delta or DWAC analysis, then I'm glad I hope you enjoyed the stream. If not, again, we're going to record these at the same time, and these will also be going up as later videos. So we'll get started on this in a second, and no problem, Deep Lounge Music. I hope that did help then. So today we're going to be looking at DWAC. It's currently at $14.15. Currently holding the VWAP. So again, massive gap today. This was on news to do with the SEC. Because in an in-principle statement with the SEC. So that's the reason for this gap. What are key levels? So pre-market, you can see we did hit both of our first deviations, 1485 and 1570. First time we come into these levels, we do expect a strong pullback. Exactly what we got here. As the market opened, we retested and basically just continued down. So this is all to be expected. First deviations are great levels to trade, especially on these high probability stocks that kind of pop out of nowhere. And if we do continue to break to the upside, then basically looking to trade it the same way as we came into here. We're looking at it short bias. If we pop up to $18.50 and looking to trade it that exact same way, short bias down to a target of $15.70. And again, if we broke it one more time, these would be really the nicest and probably highest probability levels would be $22 to around $21.70. Because again, that's our second deviation on the 1 year and third deviation on the 6 month. So really strong levels if we could go to the upside. And again, look how this stock has performed. If we zoom out to, even a 6 month chart, all this stock does is pop, crash, pop, crash. And the reason for this is, again, there'll be some sort of rumor. People are liking the hype of it, but overall it is a weak company. I would expect it to continue lower. So whenever we get these pops, really the money, where I can see the money, is just shorting these moves and trying to play it to the downside. So it is hard to borrow, but they do have tons of options available. So again, we can look to trade it through the options. Again, hard to borrow, but tons of options available. So we can look to trade the outright puts, or we can look to play something like a vertical spread. But either way, it does have options, can make it quite easy to be able to trade then. So that's then DWAC as a breakdown. And then again, we said we would cover Delta. Looks like it's trying to still push into its third deviation. But again, looking at that from both a swing and day trade perspective. And guys, just so you know, we're still holding this anchored VWAP on the Qs. It's looking nice. We're starting to see basically SPY consolidate on this anchored VWAP. I wouldn't be surprised to now see this kind of continue like this until really FOMC, because I think now people, they've taken, the first hour and a half when volume is quite high, they've traded all of that, and now again, and not too many people are going to be looking at trading. They're just waiting for the release of FOMC. But anyway, we will go over the Delta news now anyway. So let me quickly do that. So we are looking at Delta ticker DAL. Now we are extremely bullish. Even on the day we're up 1.6%, but right now we are considered extremely overbought. And how do we justify this? This is our first set of deviations. This is our second set of deviations. If you understand how standard deviation works, 68% of the data trade below that those first deviations, 95% of data trades below the second deviations, and you can see we've gone above that, so less than 5% of data should be trading above here. And once you hit this third deviation, which currently is at $49, 99.7% of data should trade below it. Now again, this is the stock market, nothing's going to be that exact accurate, but it just gives you a good signal that if you're breaking above this level, we're most likely going to start pulling back and we can start looking to trade at short bias. So $49 is that key resistance. If we did break that, we do have one higher level at $50.14. So really I could be using this as a range, but if we're coming into this range on Delta, really looking to play a reversal on it. Again, it could be traded as a day trade, but I think the big opportunities on these are going to be those swing trade opportunities. Looking to short around $50, and we can have targets down to, again, these lower deviations. So on the low end, kind of as our closest target would be $46. If we break that, we could be looking at 45, and we can even hold some of that position down to 42.75. Again, this could be from a swing. So from a swing perspective, we could be looking at a massive percentage move down to that target. It would be 12%. Even if we go to our first target, still about 5% decline in price. So great opportunity to play it down to the downside. Again, on these, I would play risk-defined strategy. So that could mean short the shares, buy the calls to define the risk, or it could mean buy outright puts, or play some sort of vertical spreads. Because what tends to happen with these third deviations is you either crash right away, and obviously then wouldn't have mattered how we traded it, we would have made good money. But what can happen, and you're kind of seeing it on Carnival Cruise Line, is it will hit this third deviation, it will consolidate for a bit, and then it will make its mind up if it wants to break higher or crack lower. So if we play the risk-defined strategy, it means if it does pop higher, again, we don't have to get faked out. If it's short-lived and it kind of cracks above for 2-3 days and then it crashes lower. By trading risk-defined, again, we don't have to get faked out on these, and that's why I like trading in that way. But overall, the key targets were as stated, $49 to $50, really looking to trade short bias into that range, with first targets being $46.50, and if we break lower, $43.